Good afternoon, everyone. A very warm welcome to the Business Today Banking and Economy Summit and Best Bank Awards. I'm Sakshi Batra and I'm truly pleased to welcome all of you here to an event that has firmly established its place in the Banking Economy Summit calendar. This event brings together industry leaders, policy makers, and financial experts to honor outstanding achievements and innovations in the banking sector. But before we go on to celebrate excellence in banking tonight, we will also be delving deeper into the forces that are shaping this industry's future. From India's dynamic Fintech revolution to the evolving role of the banks in driving economic growth, our discussions today will be exploring how the sector can truly fuel the nation's ambitions. Later in the day, we will also be awarding 18 key awards tonight as part of the 30th edition of the BT Best Bank Awards. So we are all set to begin, and first up, I'd like to thank our partners for this summit. Our exchange partner is NSE National Stock Exchange, trusted digital banking partner Nucleus Software, knowledge partner KPMG. Can we have the event AV, please?
Driven by ambition, banking doesn't just support growth, it defines it. For 30 years, Business Today has decoded markets, questioned power, and celebrated excellence. As India transforms, so do its financial institutions, navigating risk, powering aspirations, shaping the future. Leadership under pressure. Excellence earned, not claimed. Selected by a high-powered jury. Celebrated by India's most credible voices. The 30th edition of Business Today Banking and Economy Summit and Awards.
And now I'd like to invite on stage Mr. Siddharth Zarabi, Group Editor, Business Today, for the welcome address. Huge round of applause, ladies and gentlemen, for Mr. Siddharth Zarabi.
Namaskar, a very warm welcome, good afternoon to everyone here. It gives us great pleasure that the 30th annual Banking Awards, and these are been going on and running for 30 years now, is happening at this place where wealth is made every day, 5 days a week, throughout the year at the National Stock Exchange. And I welcome you all on behalf of Business Today, the India Today Group, as well as the National Stock Exchange, to this very beautiful, very nice venue. The reason we celebrate India's best banks and non-banking financial companies is that we know that without the banking system, without the financial system, our country's or any country's economy would simply cease to function. It would not run. And for 30 years now, Business Today has been both evaluating performance and also giving us a sense of what are the latest trends. And that is why before the actual grant of the awards later today evening, and like my colleague Sakshi Batra said, 18 odd awards, we have several power-packed panel discussions where we can get to hear from noted experts, including the Managing Director and CEO of the National Stock Exchange, Mr. Ashishkumar Chauhan, who is here and who is going to, in some ways, kick off today's proceeding with the first session. And through the evening, many other experts, including award winners, some of our jury members, the August jury that selected these awardees for the 30th time this year, all of them will be here to participate in this discussion. We have seen the revival in the banking sector. Don't look at individual stocks or Nifty or index levels at this point of time. With what has happened in the past few hours, Monday might be a very different kind of opening. But if you take the medium and long-term view, we will all agree that India's banking sector stands at a very, very firm footing, unlike what we had 10 or 12 years ago. And that, I think, is by itself one of the reasons that we celebrate best banks in India and the best performing NBFCs. I welcome all of you once again to this event on behalf of Business Today, the India Today Group, all our partners, sponsors, and the knowledge partner KPMG. We all work and put in a lot of time. The jury gave us its time in very generous measure, and we hope that both the results and the effort that has been put in will make a difference to our analysis of India's financial sector. I thank you all for being here once again. Thank you very much.
Thank you very much, Siddharth, for your opening comments. Ladies and gentlemen, our first session today is the future of Indian capital markets. India's capital markets are entering a high growth phase driven by digital investing, broad retail participation, strong market infrastructure, and of course, evolving regulation, alongside new opportunities in derivatives, in bonds, in private markets. And in this session, we will be decoding the future of Indian capital markets and how well the ecosystem balances innovation, transparency and resilience along with investor protection and global competitiveness. For this session, please put your hands together to welcome our special guest, Mr. Ashishkumar Chauhan, the MD and the CEO of NSE India. I'd also like to call upon stage the session moderator, Ms. Abha Bakaya, consulting editor for Business Today.
Good afternoon, everyone, and a very exciting event, and pleased to kick this off with Mr. Chauhan himself, somebody who's been witnessing the capital markets now for decades. And so we're at a precipice where we're, of course, waiting to see how India takes its position on the global stage. At the same time, we're currently in the midst of never seen before or unprecedented global uncertainty. As Siddharth also alluded to, we've just seen what's happening in Iran, Israel, and all of these global events are keeping markets on edge. What would you say is the one risk perhaps we haven't factored in, or one risk that could play spoilsport with an otherwise booming story?
In a way, first thing, let me tell you that without our knowledge, India has taken a front seat at the global stage, right? So we may continue to ask ourselves when will we take that front seat, but we have taken that front seat. It's just that we are not aware, because we have been telling ourselves for the last 50, 70 years, like, when will we take? So we keep on asking the same question. But broadly speaking, India is now the fourth largest economy in the world, fourth largest capital markets in the world. Every sort of activity, every technology, every group now has India prominently playing a role. And that's where, for me, why it happens is because your heft has increased. Probably 10, 11 years back, you were 10th largest in the world. Now you are 4th largest in the world, right? So your heft has increased, and that's where you also need to be called just because of that reason. And there is nothing right about it. There is nothing wrong about it. It's just that we have arrived. It's just that how we now play that role in a more mature, more seasoned way. And that's how I see that last 11 years have been a journey of kind of Indian economy, Indian polity, Indian geopolitics, kind of measuring up to the world standards. And it has been a one-way street in a way, because when Mr. Modi took over, India had market capitalization of 67 lakh crore. Today, I think it's 470 lakh crore. When he took over, India had 1.67 crore shareholders. I mean, the unique individuals who participate in stock markets. Today, 12.7 crore unique individuals participate. So there is a middle class that is coming up, and India also is being counted in the, say, the technology situations, the AI, which is now defining moment, at least. How it's going to define future remains to be seen. But AI Summit, you saw so many leaders from across the world came, even the best and the brightest both. And that's where you realize that today India is becoming the center stage. At the same time, the old part, what you talked about, the Iran, the Israel, the US. So for me, the geopolitics is defined by changes in technology, which then affect everything else, the wealth creation, the interstate difference between the power of different economies. 11 years back, China was not that important. Today, China is literally competing with US for the number one slot. And that's where many of these are old, unresolved issues like Iran. Many of them have come new because we think the entire multilateral system of United Nations, UNICEF, the World Bank, IMF, all these things, WTO, all these things are actually coming down in their importance. The bilaterals are increasing. And that's where, because why it's happening is again, the US is feeling a little poorer than before. And that's why they want to recede, saying we have serviced the world and they have not given us adequate returns back. And that's where these are the old situations recurring in newer ways, and you think it's new. But it's basically they need to resolve or need to be resolved. In the meantime, the newer issues come up like AI, which will have its own impact on the overall geopolitics. China is trying to assert its own importance into the world, and how they end up doing also will have newer equations coming up.
How do you see the next 10 years then panning out, given what you've just described and what you've seen in terms of evolution in the last decade? How do you see, or what are the key things? You mentioned AI, of course, but how do you anticipate the next decade playing out? And for you, what's important as well, being somebody who's been at the helm of this space, what is the kind of legacy you would like to also leave behind eventually?
Broadly, unresolved issues were there in 1911-12, that's where the World War I happened. Then unresolved issues were there in 1939, that's where World War II happened. 1972 happened in a different way. It was a different epochal movement because of the inflation that came out. And then 1989 happened because the Berlin Wall fell, where the communism went down. And then 2025 happened. For me, these are kind of seminal times in the history of the modern framework. And somewhere on the line, the geopolitics is going to play a major role because despite all these changes from 1944 till 2025, the global alliances remained almost intact. No new challenger came. America continued to gain a lot of heft and weight in every aspect of life. And now it's a different world, right? So for me, the tectonic plates are shifting. Many earthquakes will come. And India is part of that tectonic plates, which was very small, suddenly has become large. And that's where India has to also play its role very smartly. It has to figure out in these moving parts, where are we going to sort of play which role? And that is also true on many of things like today we think the AI race is being run where only two contenders are there, US and China. US is telling you that don't come into AI game if you don't have $1 trillion to invest, which nobody has. So you have lost game, and you will all have to give us the rent for the rest of your lives. China is saying we are going to give you free open source models every day, and you can do it on your laptop, don't go for them. And so these are two different fights that are going on in front of us, we don't actually realize. But for me, India has a unique role because we did not invent Unix. We did not invent computer chips. We don't invent even the other operating system or languages. But we became the best users of IT, and we actually gave the service using that to the rest of the world over the last 30, 40 years. We became services capital of the world. Now, if you look forward, AI is just one more additional part of the services that is coming up. It's just that we'll have to increase the productivity of our manpower by probably 5x, 10x, but the complex problems that India today solves in its ecosystem is going to remain. So many people may try to tell you that in next 12 months, every IT job will go away. It's basically a marketing. It's a what I call a psych and awe show by Espelli Americans trying to frighten everyone, saying, no, we are going to win. We have already won the game. Don't even start running the race, because before even the race starts, you have one type of stuff, right? So don't believe. Indians are very resourceful. They're going to go and win the world for India. But there are many other newer races that have started, we have not been made aware. So one of them is what I call, how do you use AI into physical activities? We think that writing good models and giving some answers, that is not what AI is for. How to create more production and things like that using AI. So I tell all my industry friends that whenever you go back from here, start trying to use AI in your factories with your people who are on the shop floor in some or other way, and the cost of doing it is very little. Experiment, and hopefully you will be able to get some benefits over 10, 15, 20 years. It scales up very well. The robotics with AI is going to be another race. Many of your defense, offense, many of your production games are going to be played using robots, right? And so all your competitiveness on the field of geopolitics, on productivity are going to be determined by robotics, and how we play that game using AI, that's going to be another part. The third part, which is going to be very important, is the energy. So today, you mentioned about Iran. It started World War I onwards on new technologies coming, who is going to do the land grab of oil, because that was the base of the automotive or what is now known as mobility industry. And that's where Europe and US fought, or they played those games, and now you have pretty much Gulf and other things. And now then, of course, the next layer is the land grab on AI. But broadly, for me, the energy with solar has now become much lower. It's now comparable to the fossil fuel side. But the nuclear energy is becoming absolutely paramount. As we are talking, there are many, many experiments going on, and the need for the AI industry is going to be met using more efficient sources. So cheaper, more scalable, controllable energy is going to be another sort of game that are going to be played. So there are many such games over next 5, 10, 20 years. And how India participates, not only as a user, but also to some extent inventor. For me, you don't have to invent those technologies. You can be just adaptive and still be the best. But if you can actually run the race with those guys, be participants, and also sort of contribute to that, some of our own sort of thorium part, India has been very, very big from Homi Bhabha's time, right? And so for me, those are the things, those are the battles I see. They are going to determine the future. What you see as countries talking to each other, fighting with each other, is an outcome, and will be an outcome of all these things.
I think that's super interesting, and a lot of key insights that you've shared with us. Coming to the exchange itself, in terms of products, whether retail, institutional, innovation, what are some of the things possibly that we can look forward to, keeping in mind regulatory concerns around protecting retail investors? I mean, recently there's been a lot to curb speculative trading on the derivative side. But how do you see things evolving in terms of products or participation for retail investors?
Broadly, as I said in the beginning, India had 1.67 crore investors when Mr. Modi took over. Today, it's 12.7 crore on NSE unique investors with 25 crore accounts. And so India has seen a decisive change in participation in stock markets. Stock markets from time immemorial were considered a playground for rich. Today, it is no longer a playground for rich. I mean, 12.7 crore unique individuals is around 9.25 crore men and rest women. 25% of all households in India now invest through NSE in stock market, right? That's a very large number on a per capita basis.
Yeah.
Our per capita income is not that high, $3,000. And most countries at our level of sort of per capita income don't have this kind of markets. Because it is said that poor people cannot save. And if they save, they don't trust their brothers. How will they trust some other entrepreneur sitting somewhere else to make money for them. But India has actually belied that, and today, literally the entire country is investing. Of course, given our numbers of 1.5 billion people, this is still early days, and that's why we have a long runway to incorporate more people to participate in markets, and the same time, the way the what I call capitalism works itself has changed. The industries work, that itself has changed. Earlier, you required a lot of money to create a business, which is called capitalism, that you put capital and you get capital. But over a period, last 50, 60 years, still there are industries where you need to put in a lot of money. But new industries, new activities have come where you put in little money, a lot of hard work, a lot of exposure, and you can create very large capital, like what you have seen with Nandan Nilekani and Narayan Murthy, but recently with Zomato and Swiggy and all. They didn't put in too much money, but somebody funded them, right? So that's where, for me, many more entrepreneurs can actually take a chance today to start their businesses, and they still will require some amount of money, not very large. And that's where today Indian markets have reached a stage where out of 12.7 crore investors, even if 1,000 people like your business and your story, and if they invest in your company, you might be able to raise 10, 20 crores, which through SME, we are able to, SME segment of exchanges, we are allowing companies to raise. So overall, we are in a good shape. Markets are going to be catalyst of raising resources from smallest companies to largest companies. And then that gets sort of introduced into the productive or channelize that savings into productive capital.
So since we're at the Best Bank Summit, I'm just going to ask you a cheeky question, but do you think that today banks are competing with the capital markets for access to capital when retail participants are looking for access to capital? Do we now have competition between the two?
Broadly, both are complementary. The banking system is what we call intermediation in economics, that you put in money into banks and then bank as a principal, and then bank on lends to somebody as a principal. So if that person fails, still bank will make your money good. What we do is what I call disintermediation. That is, we get the borrower or the partner met with the company directly. So if the company fails, your money is gone. If company does well, you get the full money. So in a way, the banking system and the stock market system are like complementary to each other. And earlier, when we became independent, we were capital starved, right? So that's where the banking system was given quite an importance. And it has played a great role in ensuring that India becomes industrialized, developed, and things like that. And then the stock market, which were not considered that important because only rich people could afford to lose money substantially in some short period. Now more people have capital. Some of that is coming, not that they are putting 100%. Still, what they are investing in stock market is very small fraction. I mean, India today saves somewhere between 1.1 trillion to 1.2 trillion US dollars. We are like $4.2 trillion economy. We are saving almost $1 trillion plus US dollars. Some small little portion is still coming in stock markets. Most of it goes to traditional instruments like real estate, gold, banking system and all. So it's not that they are going to compete ever. Both, I mean, ultimately you take money from stock market, but it still goes to the bank, from your bank account to company's bank account. So there is no way that the money is being sucked out by stock market into something else. It's still in the banking system only.
All right. We've achieved this enormous feat of having most MIs listed from BSC, NSDL, a whole host of them. You also have your own IPO just around the corner coming up. Talk to us about that. I mean, this is a huge feat at this point, and what can we look forward to?
Anyway, I mean, as you rightly said, why the MIIs, that is market infrastructure institutions like stock exchanges and depositories, should list is because they bring much more transparency in their working. And these are public sort of public institutions with public purpose, right? And regulators may be looking at them with a microscope, but still many times they may miss out. While as the public, when they are investing into these companies, they will ask tough questions, scrutinize them very heavily, and that's where these companies need to list. NSE has been trying to list from 2016 onwards, so now it's 10 years. Now SEBI has given no objection certificate. So hopefully we'll be able to come out with our DRHP, that is draft red herring prospectus soon. And then later on, after another SEBI scrutiny, we should be able to go live with IPO. Probably somewhere between 6-8 months is what we think is an ideal time.
Give us an indication of the scale. I mean, we can all hazard a guess, but if you could share with our audience.
No, I mean, it's one of the largest institutions of its type, and naturally pricing will be determined by the merchant bankers and advised to the board of the exchange as and when the time comes nearby, few days before. But currently, you know what are the prices and how, I mean, today NSE shares are getting traded in private markets, and you can see the market capitalization. But that should not be taken as a basis on which NSE's IPO or NSE's offer for sale, because we don't need money for ourselves. So we don't plan to raise money in form of IPO, but it will be an offer for sale where we'll collect the shares from the current shareholders, which is now more than 1,95,000 shareholders. Eligible shareholders will give those shares to sell to the market.
Sure. All right. When it comes to trading hours, now just on a lighter note, but everyone's always, watching out for will there be another move on maybe extending trading hours and those kind of things. Any news on that front?
No, in a way, I mean, every day there is a move.
There's
right?
a new, yeah.
And every day is a new day. So many changes, so much volatility. Currently, there are no plans to extend trading timing because there has been no regulation that has come from SEBI in this regard. But in GIFT City at NSE International Exchange, we trade Nifty for 22 hours a day.
Yeah.
Before Japan starts trading, we start trading.
Sure.
And after California in America sleeps, we sleep. So effectively, we provide you 22 hours day trading, 22 hours a day trading. You can make it 24 hours easily. Technologically, there is no problem at NSE level because it's already proof of concept is live there. But it depends on how the market participants perceive it, how the government perceives it, and how the regulator allows for it, right? So for us, we are basically a facility provider for the broking entities, the companies and the investors. And if there is a need and there is a regulation, we would certainly want to provide it.
The settlement with SEBI, any indication on that and whether it's heading in any conclusive direction?
We have again written to SEBI many times. There have been indications which have been positive about the settlement, which basically this is about, I think, co-location court cases which are going on between the regulator and NSE. And so we have always been wanting to settle those cases. So as and when SEBI's intimation comes, we would be delighted to do whatever is required by the regulator to sort of put it behind.
Okay. Just one last question, but when we moved expiry to 2 days, just want to get your perspective on how that's shaped up as a move. Do you feel that in terms of distribution it's worked, or on the other hand, has it had any major significant impact for the markets?
Broadly, India is a very high-tech country. We don't give it that kind of credit. And so T+1 settlement was a unique achievement by India, first time in the world, according to the world. But that time also we could have done T+0 settlement or instant settlement because our banking system is real time, stock markets are real time, our people are real time with all their mobiles continuously, right? So with UPI and all this, India finds it very easy to move very, very fast. That is not true with the rest of the world. And so literally America went to T+1 one and a half years after India went live, and Europe will happen hopefully in 28 or something. So effectively, 2028 that is. So effectively, we are pioneers of anything to do with the high-tech part of the activities, and we don't take that much credit as an ecosystem, that is stock markets, the depositories, clearing houses, and banking system, and everyone, including the regulators, who have become very technology savvy. What it does, the settlement, the difference between the time taken between trade and settlement is a time which increases risk. Because that time it's in no one's zone, right? No one's land. Buyer has bought the shares, he has given the money, but possibility is that he may not get the shares. And things like that. So when you try to settle at the almost instantaneously or as instantaneously as possible, you are reducing the risk of default on the transaction. That's why most regulators across the world try to make you do settlement as fast as possible. Right? Now, we had a choice to go for T+0 or not. Right? We did T+1. We were the pioneer, but we have been pioneers of T+7 also, T+3 also, T+1 also, right? Now, if you do T+0, the rest of the world which trades in India, that is the American investors or European investors, there is a chain of intermediaries. That is the trading, the people who buy that, they are called buy side, which are the funds. They place orders on the brokers through their offices in Singapore or Hong Kong or Dubai. That comes to Indian broker places order. Then in the evening, a contract goes to them. Then that contract goes to the Singapore office or Dubai office. From there, it goes to global office. Then it goes to the global custodian. Then it goes to local custodian. Then the money is taken. So all this period thing we completed in literally from 3:30 p.m. to 7 a.m. in the morning next day. Now, if you imagine if you have to do real time, all this entire chain of people across the world will have to work 24/7 for doing trades on India. And some of them may be willing to do, some of them may not be willing to do, some of them will have to figure out how to fund the entire activity before the trade happens and all. And that's where many of them may not be able to comply with our tough, even today, T+1, ask any Indian institution, any Indian retail investor, it's instant. They don't even bother that better to complete it. It is that chain of things which happens outside, and we also need to take them along, right? The foreigners also bring in a lot of value to our markets when they invest into our markets, right? And that's where, for me, we need to be aware of all the constraints that sort of happen in the world, and that's how I would say T+0 in that sense is still far away, but in many other cases like mutual fund retail distribution, we do T+0, right? So that's not that we can't do it. It's just that there has to be the clientele which is able to do it.
An opening note to kick off the summit and awards, Mr. Chauhan. Just a short message. We have a lot of award winners here tonight, and today, I think while we're of course recognizing the best banks, the financial system includes major fintech companies, NBFCs and so on, and it's really expanded. The universe has expanded in terms of what we can achieve together. Any message you'd like to leave us with as we kick off the summit?
I think Siddharth said it succinctly that Indian banking system has come a long way. It's pretty much the most robust banking system in the world today, with the minimum NP on net basis. And again, when we go back to 2014-15, we know how bad we were in Fragile 5 and the number of NP, the NP started increasing so much. Today, we have become a very, very strong banking system thanks to technology, thanks to hard work, thanks to policies of the bankers and the Reserve Bank and the government of India. And so, now is the time to also look at how do we fund the next level of India's growth, right? Today, we are also the least leveraged large economy in the world. It means the banks have a very large leeway to lend. And how do we make it incentivized for the banks to start lending again, right? So that's how, for me, all bankers sitting here or listening, we need to create a framework which allows people to do lending in a more safer, because now we have, of course, the banking regulations have changed and in such a way that you are able to take over assets, sell them out and things like that. So those are the things which this government has done, basis which the new, the NPS have gone down. But now how do we take a leapfrog and increase the growth rate by lending more?
Fantastic. On that note, a big round of applause, please, for Mr. Ashish Chauhan.
Thank you.
Thank you so much. May I please request you, sir, to stay back while I request Mr. Alok Nair, the CEO of Business Today, to please present a token of appreciation to our special guest. Warm round of applause, ladies and gentlemen, for Shri Ashishkumar Chauhan. Thank you so much, sir. All right, ladies and gentlemen, we'll move on to our next session this afternoon, and this one is called Reimagining Banking in an AI-First World. As we move ahead, the next phase of transformation is unmistakably AI-led. Our preparedness for the shift towards AI-led banking, responsible deployment of AI at scale, and how the evolving ecosystem is reshaping the core banking operations at large, and how banks can future-proof themselves to stay relevant for many decades ahead. We're going to be discussing all of this and much more with three brilliant speakers who are going to be joining us just now. Let's welcome on stage Mr. Sabyasachi Goswami, the CEO of Perfios, to join us for this session. Mr. Sanjay Doshi, Partner and Head of Financial Services Advisory, KPMG in India. Mr. Parag Bhise, the CEO and ED of Nucleus Software, also to join in on the stage. And I will be moderating this session, Sakshi Batra, Senior Associate Editor for Business Today. Good evening once again, ladies and gentlemen. We're talking about banking, which is entering a hugely transformative phase. And what we're going to be discussing is that AI, artificial intelligence, now is not just seen as a tool, but it's going to be transforming the core of how businesses and banks truly operate as well. And we're going to be seeing the readiness now for the banks in this space. Do we have the readiness at this point in time to deploy AI responsibly, securely, as well as at scale? And of course, we have all these three gentlemen who are enabling the banking system in India to do just that at this point in time and to prepare us for the future decades ahead. So welcome to all of you. Thank you so much for taking the time out. Mr. Goswami, I'll start off by understanding from you. You've really seen the evolution of technology and how that has reshaped the banking industry at large over the last 5 years, 10 years or so. Where are we at? And what do you foresee going forward from here as AI truly becomes the core of banking?
I think at the cost of not being beaten up by my clients when I meet them, I think we are still scratching the surface. Nothing much has happened. The metrics itself today that we get measured in our country is flawed. The metrics in which the AI get measured today is, has your productivity gone up? What's your efficiency? That's the wrong metrics in my view. If you have not been able to create any new products using AI, and in that process, ideally efficiency should start reflecting. But if you ask the basic question as, what's the efficiency gain that you've got? I think we are not doing justice to AI, truly. Basically what we are trying to say is, we have been using more than about a decade now, very strong ML models. We have advanced that a bit, but we have still not truly started using AI by creating new products. I'm yet to see new products being created by the financial institutions, and I'll talk more, but just leave a thought. When do we stop moving away and completely away from a static policy to a dynamic policy? In fact, I would love to see we stop using the word policy. If we are still using that policy guardrails and I'll have to lend as per policy, I have to give this product as per policy, unfortunately, we are still living in traditional times. A lot of excitement to come, and I will hope that the industry is thinking on those directions. Of course, has to be blessed by the regulator itself. So the first move has to be by the regulator. But unless we move there, we'll just see very temporary momentum in terms of efficiency gain. But over 3 to 5 years, we'll start losing.
Okay, we'll come back and circle back to the regulator part in a bit. But Mr. Doshi, I wanted to understand from you when it comes to the current scenario. Explain to us, are you already seeing the readiness in moving away from just AI adoption to truly creating AI-first operating models in the system now?
So I think this is not a one-time event where suddenly the world in AI is going to change overnight. As you rightly put it, it's reimagining banking. And when we are talking about reimagining banking, and as what Mr. Goswami said, it's not only a game of productivity, but it's a game much wider, much larger. And from that perspective, if you think about it, yes, some of the steps have started, where banks have started seeing it more from how you really moving away from a simple automation game, which is a simple productivity game, to a much more transformative game where an AI actually touches various parts of your business and actually is bringing either services to the customer or actually making changes in the way they operate, even within. Either it's on the risk management side, whether it's on the governance side, and more importantly on the fraud analytics side. So I think some of the areas where I think, I completely agree with Mr. Goswami, it's early stage, but some of the early initiatives which has really started happening is one on the payment side, where how you really are looking and monitoring your transactions. Second is on the fraud analytics side. How do you really, try to mitigate and reduce the events on cyber frauds? For example, I recently faced an experience where 2 days back my Forex card was getting debited wrongly from Latin America. Okay, and I got immediately a message from the bank before I do anything saying that we are monitoring it. Seems like these are fraudulent transactions. Right now, there is something, absolutely a technology which is really working behind it. So some of these things are happening, but at the same time, the banks have to invest a lot. Is their current data architecture, the technology, this is, and it's really functioned quite well. Means banks have really adopted technology in our country quite nicely and aggressively. And that's where our risk management is also so strong, so robust. We are considered really one of the best governance from a banking industry perspective. But at the same time, this is dated. So from a new AI world, where something like agentic AI, which will really require very fast processing, is our current technology and data architecture ready? No. So yeah, there is a lot of way to go for it.
Right. Mr. Bissett, do you see again AI as just a feature in the entire banking arena right now, or have we moved forward in creating AI first models that are truly transforming the way traditional banking is done?
So I'd say that is the starting point for sure. So like with any other technology, you really want to understand the impact that it will make. You will really, so it started there on the scratch, and that's where you saw first use cases being, as we say in technology, on the front end side, where customer facing chatbots and call centers. That is the kind of use cases. But I think slowly we are getting deeper. I can talk about the area in which we are working now. There are use cases which are getting built into credit decisioning. Collections is a very big area where AI can play a very big role, and very soon. Because there you have to do with customer behavior. There's a lot of data already available. Contact center data, customer calls are getting recorded for ages. So those cases. So while I agree with both my co-panelists that we, like Sabya, we are probably just scratching the surface, and my other panelists talked about some more use cases, but I think we are slowly getting deeper, and we have to realize that we are talking about the banking system, right? Where actual people's money is at stake. So obviously, cautious steps needs to be taken, and I'm very happy to say that whether it's the government, the regulators, or companies like us, we are trying to understand the technology slowly and then building those use cases.
Mr. Goswami, I think a lot of people would want to understand from you, we've been discussing about AI, and the first question that comes to mind is how many jobs and what kind of jobs is going to replace. Is it going to be seen in the near future that the bankers will be completely replaced by AI? Do you see banks being run completely on agentic AI? Will that be a reality, or will only the role of bankers will change?
I would say the truth lies in between. Huge operational-led job will be AI-led. Intelligence, governance-led jobs will be run by bankers. The reason I say that because by the time the machines become intelligent to that level in terms of reading and analyzing millions and billions of data, the judgment part will still stay. So wherever there is judgment, strategic, governance and compliance come into picture, I think the humans will have to intervene. But large part of, and that's what you are already seeing the banking institutions already moving, very low end, very operational intensive jobs are already moving to agents. Like what we do, I mean, in the support, that means the call centers are already moving to agents, right? I mean, very recently, Bajaj has claimed victory on that. Tata Capital is claiming that TAT has come down, and many such colleagues and friends who talk about this. But as I said, again, that brings the question to efficiency, not truly intelligence. So intelligence is still human-driven, not through agentic.
Okay. Mr. Doshi, what would you really say? Where do you think in the banking system still would you say we need human oversight, even if onboarding, customer experience, even to that matter, collections for that matter, all of these things is slowly and gradually are taken over by agentic AI. Where in the banking system would you continue to see that human oversight is needed?
So first, to start with, on governance and risk management. See, at the end of the day, AIs and AI, whatever you call, right, they are all bots and they are all machines. The regulator always wants someone who is a human being, an individual, who will be responsible, who will be signing things, and the law requires that individual to go to prison if things go wrong rather than the AI, correct? So at the end of the day, humans will be there in especially anything which is going to be decision making, where any kind of intelligence of course has to be exercised, any kind of governance measures will have to be, monitoring will really increase, both monitoring backed by decision making. So that's what, because we are going to deploy bots especially at the operational level, but at the same time this can't happen without any kind of monitoring. So those monitoring, so things like reconciliations, etc., all those things will definitely be done by bots. But then at the end of the day, are those reconciliations correct or not? Individuals will have to sign it off. It can't be without individuals signing it off. So individuals will be there in those areas.
Okay. Mr. Pisse, if you could also highlight for us, how do you think banks can adopt and deploy AI at scale without compromising the regulatory aspect at this point in time and accountability aspect at this point in time?
Sorry. As he said, I think it will always be a combination. I think why we are taking time, why our entire ecosystem, whether it's government, the regulatory bodies, the banking ecosystem is taking time because, there's a lot of talk about ethical AI and explainable AI. So, and these things are only maturing now. So, especially in the banking system, as has been said, you can't just trust the machines because you're talking about real data. So, I think the day we are able to have that confidence that whatever the decisions the AI is taking, there is explainability behind it. I think that is the time when the usage will really scale up. That's what I think.
Mr. Goswami, I'll also ask you now, since you've been talking about how in most of the bank's cases you do see that it's largely AI adoption to improve productivity and efficiency, and there is a lack of innovation. So which are the sectors where you believe true innovation should be done, and that's where the bank's focus should be at this point?
So I think if you take the history of last 3 decades, we have pretty much stayed true to the original products that we have created since then. Not much has happened except for few true kind of innovation that we have seen on the payment side. But if you look at the credit side or on the treasury side, very limited innovation. So I think there's a lot of scope to do on that. What I would expect, and we have been discussing internally and with a couple of our colleagues in the banking fraternity, that gone are the days when you have to lead the institution through a product-led approach, actually. Why can't you dilute the product approach and create persona types, because AI gives you that power to create billions of personas. So what I keep saying, an example, let's say I approach a bank and you approach a bank, we'll be pretty much looked at with the same lens, except for unless you work in a different industry type and I look at a different industry type, and our income and demographics. Apart from that, bank doesn't look at any other parameters. So it is typically those demographics which defines. What is that? What's your income? What's your balance? What's the place that you work, and where do you stay? Or which car probably you drive. That's about it. But the AI gives you a power to create billions and billions of personas. What I'm saying, what I was mentioning in the initial part, you can actually have a dynamic hyper-personalization product, which we have been talking for the last 5 years or so, will truly come into play now if we use AI. So that means the banks have to articulate the financial requirement before the customer can imagine what he needs. Instead of being a product-led, that this is the XYZ product I have, please choose from this. Why should I, as a customer? So actually, the bank has to get into the customer's zone and keep creating dynamic products and dynamic personas to suit those products. I'm sorry, I have not found a better word than product, but not a product, but something which matches the future requirement that I can create.
Personalized solutions.
Absolutely.
And, when we look at targeted approach, that's what exactly you're looking at.
Yes, and we always say risk-based pricing, but that's tied to a product or a demography that you attach to that product. It's not risk-based pricing truly. So when you go to dynamic mode, and when I say persona is truly actually not well defined in the financial industry.
Yeah.
Go to Walmart, you will understand what is persona. Or probably Google, you will understand what is persona. So I'm talking, can that be brought to financial institutions? Create those many personas, create requirements according to that, create the pricing according to that.
Okay.
Dynamically, no static policy, no static product.
Okay.
That's the innovation that has to happen.
Okay. Mr. Doshi, I'll ask you, one, we are looking at AI adoption at scale and deployment at scale. How does the risk landscape change? Can you also give me an understanding of what are the essential guardrails we need to have in place to protect data?
In fact, I was just going to add to what Mr. Goswami said, and that was more on the risk side.
Sure.
So you're right, you can actually go on product sales, trying to personalize, trying to preempt what the customer needs. All goes back to customer servicing, effectively, what the client needs, get it. But at the same time, the client keeps the money with the bank because there is a big element and a word called trust. Until the time that trust, and of course a bit of returns now, given people don't want to keep money in a savings account, you get better money on the wealth side. I think AI can try to see how that can be resolved for a bank. But then other than that, the trust part and the entire element of how your money is not getting misused, how you really are not losing money. The fraud part, the cyber frauds are going day by day. The more technology, the more frauds. And I think one of the biggest areas where actually AI can contribute is in that area. One is on the fraud side, and again on payments. How do you really, especially for a country like India, the way money is being misused, the entire laundering part of it, how can that be really tracked? That something is a great one big agenda for the nation, which probably AI can be used for.
Sakshi, if I
Sure,
can add,
absolutely.
there is an acronym on that, that's CFCO. So C is credit decisioning and underwriting using the latest AI native. The F is the fraud. That means instead of post facto investigation, it is real time
Bed.
monitoring. Okay. The third is customer engagement, which Sanjay has been saying, which is more hyper personalized engagement instead of static data points and using that and engagement. And fourth is O, that means operational efficiency and governance. So we should remember that when we are working on any new innovation through AI.
Fantastic. Mr. Bise, if you could help us understand on the fintech products aspect, how can they enable banks right now to enhance their AI tools and the adoption that they're doing at this point in time equal to global standards?
What I can say based on what we are trying to do is, and referring back to your first question, that is it on the surface or it is deeper, and I can talk about players like us and my industry colleague here who are into the product space. What we are trying to do is providing a lot of use cases that are embedded inside our product. So it becomes the part of the journey. It's not something that you are bolting on the top. It is like becoming part of the products which are very heavily used by the banking system. So I think that is where players like us are really helping out, providing embedded AI technology. That's what is our thought process as well.
Okay. Let me ask you, Mr. Goswami, how do you really measure AI-based success when you involve all of these tools and create all these operational models? How will you measure success then?
So the metrics of success is not efficiency, as I said. That's the wrong metrics to measure. The metrics to measure is, are you able to create a differentiated experience for customers and stakeholders? Very, very broad meaning that you can draw out of this is, are you becoming more intelligent, or are you still still your products are based on traditional models or data? So when the measure should be, have your product and experience become more intelligent. And the second bit is, to do that, what I feel that we all need to do as organizations in our own space is that the AI has to be embedded in the core architecture, and we have to stop believing that it can stay as an auxiliary feature. As of now, we are all treating as an auxiliary feature. Unfortunately, that will not create that experience that we all want from AI.
Absolutely. Mr. Doshi, technology is moving fast, and every day we are discovering some or the other aspect of AI. How fast do you think that banks need to move to, truly adopt what we are looking forward to, what Mr. Goswami has also marked out?
So I think the world on technology is changing fast. More importantly, one of the biggest segment in the population for banks is this new generation. They are changing fast, and they have changed already. Means every 3 years they learn something new. And to retain those kind of clients and customers, you have to be agile. But at the same time, it's not easy. I think the tech stack of a bank is really built over years. And something like agentic AI, or you really want to deploy complex AI, you really have to then spend a lot of time invest in technology. It's not going to be again done in 6 months or 1 year's time. It can take 2 to 3 years of how you're going to transform. No bank would like to touch its core banking. And some of these aspects are going to go back to how core banking gets impacted, right? The entire CBS system. So that is something which is again a question mark. We don't have an answer today. None of the industry players really have an answer, but there are new things, new softwares are coming, new companies, platforms are coming around those areas as well. So yeah, it's going to be important for banks to continuously change. But again, AI is again, as I said, not a short-term thing. It's going to be a transformation over the next much longer period, maybe 5 years, 10 years. But yeah, it's always phases.
Well, thank you so much to all three of you for being with us on this special panel and sharing such wonderful insights. Huge round of applause, ladies and gentlemen, for our fantastic set of panelists. May I please request on stage Masuma Leelavaram to please come on stage, National Head of Business Today, to please present a token of appreciation to our guests. Ladies and gentlemen, Masuma Leelavaram. Request a token of appreciation for all three of our guests, please. and ladies and gentlemen, for our panelists here. Thank you. Coming up next is our session on banking on the economy. India's macroeconomic signals are sending mixed messages as of now. Nominal growth has moderated and inflation is easing. The rupee value has also, against the US dollar, come under pressure. The capital markets, after a sustained rally, have turned volatile now, triggering dollar outflows. And this has raised a key policy question now. Should growth be supported through accommodative monetary policy, as there is only limited fiscal space that we have? Changing trade dynamics, as well as another layer of complexity is being added here. Against this backdrop, the session will be exploring how policymakers, financial institutions and businesses can truly navigate the interplay between growth, currency stability, capital flows and evolving trade architectures. We are also positioning India for resilient, sustainable expansion in an increasingly multipolar global economy. Let's put our hands together to welcome our next set of panelists, Ms. Ashima Goel, the Professor Emeritus at IGIDR, Mr. Madan Sabnavis, the Chief Economist at Bank of Baroda, Mr. Soumya Kanti Ghosh, Group Chief Economic Advisor at SBI, and let me call upon stage Mr. Siddharth Zarabi, Group Editor for Business Today, to moderate this session. Huge round of applause for our next panelist viewers.
Good evening and a very warm welcome to this venue once again. It's a very interesting time to be discussing this subject because India's economy and its growth is known. We just saw the latest set of growth numbers, and since we have economists on the panel today, before I get on to the subject, what I want to do is to get all of them to quickly give us a headline view and appreciation of the latest data that was announced yesterday. 3 years of 7% plus. Soumyakanti, starting with you. This rebasing and the methodological improvements that have been done, what does that tell us about the shape and size of the Indian economy?
Yeah, thank you for having me on the show. I think I'll very quickly mention 4 distinguishing characteristics of the data which has been released. The first, which you rightly mentioned, that last 3 years the average growth rate is 7.3%, 7.2, 7.1, 7.6. So this is actually remarkable. The second thing is that, contrary to the popular perception, this growth is manufacturing driven. Last 3 years, the growth rate of manufacturing has been 11.2, service actually has been around 9% and agricultural 3%. So it's actually contrary to popular perception. The third point is that, who said India is not investing? The investment rate is at 34.5%, savings is at 32.8%. And the fourth thing, I think we are all talking about a decline in nominal GDP. The real GDP, you do know, has been rebased upwards by 100 trillion. The nominal GDP of FY26 is 345 trillion. The real GDP is 323 trillion. And in every year from FY24, the real GDP has gone up by 110 trillion. So we should ask ourselves the question, what is the correct metric, real GDP or the nominal GDP?
Madan, take that question that Soumya Kanti raises and please add to that.
No, I would tend to think that what the government has done is right. You need to make the indices, the series which we're talking of, more contemporary, which is what is being done. And I think the way I look at the numbers is, of course, there are going to be substantial changes in terms of how the numbers looked earlier and what they look now. But I think it sort of vindicates the view we always had that the Indian economy was doing well. So the 7% plus growth is a very positive thing to take from here. But there's obviously going to be a difference between the real and the GDP numbers, because the way in which we calculate GDPs, you get everything in nominal terms. And then you start using the different deflators. Now, the thing is that we're going to have a new WPI also coming up in a couple of months' time. I don't know when it's coming out. So it'll be interesting to see as to how these numbers finally behave, because you're going to deflate certain numbers with CPI, the new CPIs, somewhat being done with the old WPI. So that could be another thing. But on the whole, I think we'll remain in the same range. We always believed the difference between the new and old numbers would probably be not more than 0.1, 0.2%. And that's what we are seeing today.
Ashima, that same point, how do you read these numbers and what does it tell us about the Indian economy?
there was a big controversy about the absence of double deflation and therefore
Yes.
that our growth is illusionary. So I think going through a careful exercise with full double deflation for the manufacturing sector and some extrapolation method for others shows that real GDP has actually increased. So that means that with this more careful estimation that growth is real. The other things I want to flag about the new GDP is that it shows the diversity of the economy. We always thought the economy was services-led. But it shows that manufacturing has been doing well, investment has been doing well, agriculture, that farmer incomes have gone up because of things like PM Kusum and so on, which have given them electricity at cheaper rates. So, and then there's also the issue of low inflation. I must flag that again, real GDP being higher means that inflation is credibly low. And the final, and we can look forward, we should all internalize that inflation is going to be around 4 or below, and we should build our financial, etc., business decisions on that. And finally, that India's data is credible.
Yes.
That there has been a very careful revision. We should have confidence in the data.
You took that last bit, and I was going to sort of ask all of you to say that, does it answer all the critics? Madan, you wanted to come in and then we'll take that.
Just on one point, it's like we are all very happy that the manufacturing sector has grown at double digit. But I think there is one anomaly out here, because if you see how value added is actually defined, we're looking at profits plus the return to labor. Now, I don't think corporate profits have been that buoyant. So I think that's the only anomaly which I see. And the very fact that lots of people do believe that our stock market is overvalued in some sectors. So I think that's one piece which doesn't really fit in.
Come Monday, some sectors, because of what is going on right now in the Middle East, will perhaps react. Soumyakanti, come to this, the bigger macro thing. And none of you are politicians or spokesperson with a political mandate, but as economists, this constant questioning sometimes and these doubts being created, India data is fixed, it is not good enough, it is not captured well, methodology is poor. With yesterday's exercise and with what Ashima and all of you have said, have those doubts been put to rest completely, or is still some improvement required?
No, I think improvements are an ongoing process, but that does not mean that you are going to discredit the statistical system of a country which has been built up assiduously over the years. I remember when India was doing significantly GDP, the first narrative was that the nominal GDP is high, is very low, so therefore that is not good. Now the real GDP has gone up now, so basically there is always the narrative of a different and other thing. So in my sense, I think improvements are always important in a national statistical system. I think CPI has been done. The WPI has come out, and all this conclusively shows that the growth which is happening is actually more broad-based. Otherwise, you cannot have a system whereby you go through so many iterations that the real part of the economy is growing and the deflator is actually now less than 1%. So that exactly coincides with the inflation regime. So we have a low inflation regime, stable growth, the external sector is doing well, and possibly we are also saving and investing to some extent which was not we had believed in.
So, I don't know how many of you have a professional interest in economic data. I know the bankers certainly would have, because this data will tell them about future trends. But it is very clear, if you heard from the panel so far, inflation used to always be a concern, impacts consumer behavior and spending. Growth, and I would add, before I go to Madan, that does this really mean that the Goldilocks description of the Goldilocks phase description for the Indian economy, that gets further stressed, buttressed, Madan?
No, actually, Siddharth, this whole concept of Goldilocks, I think, which people have brought up, it's been heard in the last 1 year or so. I think it's primarily because the statistics have been good. Now, we all know that the low inflation was because of a high base effect. And we're not going to have inflation rates of 1%, 2% in the next year. We're going to go back towards the trend 4%. So I think Goldilocks sounded very nice. It sounded very cool today to keep saying that, look, everything is looking so positive. But I would, as I told you, I never really subscribed to this concept. But the fact we were doing well in terms of growth, we're doing well in terms of inflation. Even if inflation comes around 3.5%, which I believe will happen in 26, 27,
Yes.
I think that's the normal inflation and inflation which is required in an emerging market like us to provide the kind of incentive to producers to produce. Otherwise, if I have zero inflation, why should I be getting into manufacturing? Why should I be getting into services? So I think we're along the good path. I think that's what I would be referring to, rather than this kind of going back into these fairy tales and saying Goldilocks, and tomorrow you say, has inflation doubled because 2% has become 4%? Is it something horrendous? The answer is no.
Absolutely.
So in fact, just as an extension, I would say that even if you're talking in terms of monetary policy targeting, nothing is really going to change. We're going to remain with the 4% targeting.
Ashima, as I come to you, I want to sort of focus on the fact that we are having an economy discussion in a gathering of bankers. And the question I have for you is, a bigger picture level, are we witnessing, a healthy financial system in an economy which is growing fast and is pretty deep? Or do you see some early warning signs of certain imbalances lying beneath the surface at this stage?
Uh-huh. Yeah, before that I come to your question, I'll just say one thing about the credibility of the data. But one of the things expected was that as you get better data on the informal sector, you'll see that it's been pulverized and therefore growth has fallen. So we have seen some reductions in trade and so on sectors. So the data has captured that. But overall, we've seen growth also in the informal sector, higher investment, which is captured in household investment. So it is a balanced picture where some sectors are doing less well than we thought they were, but others are doing better. And this is the diversity of the economy.
And we didn't talk about agriculture,
yeah,
but
right, agriculture. Similarly,
is also
productivity is going up, which is very good for possible growth and broad-based growth. So now to come to the financial sector, I think the same issue of diversity makes for stability. I think in the first session a question was put to Mr. Chauhan, do you see banks as competitors or vice versa? So I think that banks earlier were doing all kinds of financing where there was asset liability mismatch and so on. So if markets develop, bond markets need to develop even more, then that is complementary. And this sort of balances excess. And you were just talking about the stock market and what is going to happen tomorrow when or as soon as markets open after this recent war. But again, we've been seeing that we've been going through a period of tremendous shocks, all external shocks. And earlier, whenever there were outflows, you would see stock markets just crash. But we have domestic investors, we have SIPs, we have mutual funds, so that stock markets are much more stable. The volatility is less. A crash is not really a crash, although the headlines still say crash.
Absolutely.
Right? So, and one point about AI, the stock markets are supposed to have been scared by India not participating in the AI race. Now this throwing billions of dollars into it, that is not worth it. But what the Indian strategy is really that we have a very good public infrastructure. You develop use-based SLMs, which tweak these AI models to increase productivity in different areas, to increase inclusion, and then they fit into this overall public infrastructure. And I think that is slowly being showcased, and we should see that markets should realize that India has a credible AI policy, which is what suits emerging markets.
Absolutely. So, Amika, they come in on this. How resilient is our credit engine?
No, I think the credit growth, I'll just give you couple of numbers again. In terms of, in 2014, our outstanding credit was around 77 trillion. Today, this number, I think, is at 250 trillion. Our deposits were at 60 trillion. Today, this number, deposits are actually now at 210 trillion. So, basically, there is a 3.5 time increase in both the credit deposit ratio. And our banking system is also now very sound in terms of a capital risk adjusted ratio, NPA ratio, GNPA ratio. To your larger question on the credit, I think credit growth is still growing at around 14 to 15%. And one of the most remarkable discoveries, and I think this is the point with Ashima also mentioned about the informal sector, the SME sector has been a revelation. The credit to the SME sector has been growing at 25% continuously in the last 1 year. And
we will hear from the bankers
yes.
in a panel soon after.
So basically, and that shows that there has been discovery of price discovery in the sector, and also the SME sector the government has done a lot of things. So basically, these are the things which augur well in terms of the resilience and the sustainability of the credit growth in the future.
Madan, I'm adding to all that you might want to say. Are bankers and is the system underestimating the risk of unsecured lending?
See, if you're looking at unsecured lending, one, we should remember that the RBI has always been cognizant of what's happening. So there has been intervention whenever it's required in terms of the capital weights. Now, unsecured loans, it's a kind of, there are two views on it. One is that if economic growth is to be pushed forward through consumption, and that's what we have seen in Western economies where consumption increased, people did use a lot of leverage for it. That's, of course, a way to do that. You need to have unsecured loans. Now, if you're looking at the banking sector, there's always the risk of saying that what's going to be the NPA level. But today, if you're looking at the NPA levels in unsecured loans, it's very low for the banking system. And normally, most of the banks, for example, they tend to lend to the existing customers. So actually, there is a zero risk which is being carried. But to the extent that theoretically that is unsecured loan something that should be encouraged, the answer is yes. But should you be very much guarded? The answer is also yes. So I think we need, because after all, banking, lending is a risky business. You're taking risk everywhere. Yes. It can be infrastructure, it can be lending to an individual. The question is that how do you ring fence it? How do you make sure that your prudential norms are being adhered to? And what kind of systems you have in terms of monitoring? So I don't see any kind of a major problem in terms of unsecured lending. And when we did have it in 2024, the RBI did intervene and we saw the rate of growth of unsecured loans has actually come down. But we should not look at it as being a negative thing. It's actually something which does aid consumption. Only thing is that you need to channel the funds in the right manner. Just one point I wanted to make, because I think which was mentioned about SME lending going up. I'm not sure how these numbers work out, but we should remember that ever since we redefined an MSME concept, larger companies became smaller. So that would have probably added to some kind of growth which we are seeing in these numbers. We have to be mindful of that.
Ashima, on that same point, from a macro perspective, this growth story that we are seeing, does it signal strength or do you see some areas of vulnerability?
My own view is this increasing diversity. We are a large economy and different sectors are being developed. We are seeing this in trade also. Earlier we were reliant on the US, the markets were very focused on that. Now with these FTAs, the same diversity. And whether it's a financial portfolio, whether it's an economy, the whole world now, people are asking why are so many countries interested in India? So this diversification story really adds to resilience. It's a recipe to insure yourself against shocks. So I think that is a positive for us. And also this vulnerability, very often people flag it is that household savings have fallen, therefore credit growth could be too high, deposits are not keeping up. But then worldwide, the diversity has to hold in the bank's book also. They don't need to rely only on deposits. They need to give a better deal to customers. Yes, attract more deposits, but they can also borrow in markets, have other kinds of structures, which also increases
May I interrupt
leverage.
you and follow up on the deposits challenge? Is there something that is structurally broken or wrong or deficient, particularly in the Indian context when it comes to deposits? You and then I'll go on the same point to the rest of the panel. Please.
No, I think that there's more competition, so they need to design, we would AI or more personalized services or ways to give a better deal that suits customers, what they need, etc. They need to attract more customers. So it's not that you just get your CASA and you're fine, you don't need to do anything. You need to work harder at it. So it is about a lesson
I hope the bankers here are listening to that.
You need to compete. But at the same time, it is cyclical in the sense we are in an upswing, and at such a time, if your credit growth exceeds deposits, it's not something to worry about so much, because in the aggregates, and then as income growth, savings grow, and that leads to more deposits.
Yeah.
Okay. See, the thing is that I think there is a serious problem we have in terms of raising of deposits. Okay? Look at the way monetary policy works. I lower the repo rate by statute. 60% of my loans get repriced, the EBLR. Then the MCLR also gets adjusted. I have to also lower my deposit rates, otherwise I cannot maintain my NIMs. So what do? I have to lower my deposit rates. I lower my deposit rates, I lose my deposits. Today, for example, even as an individual, if I have to put money in savings, 6 to 7% is a rotten return to get. I can get 12% in the market. You put it in a mutual fund, sit for 10 years, maybe 3 years they are negative returns, 7 years ago, on an average, I'm going to get 10 to 12%. Now, how do I balance this out? I think something which we, from the point of view of banks, we've been putting forward to the finance minister is that you need to give certain tax incentives for deposits. Not just because I'm working in the banking sector and I want this thing to be sorted out. Bank deposits are actually used, number one, for government borrowing. 18% SLR is there, mandatory. Second part, even in terms of lending, 40% is actually meeting the statutory requirements of the government, which is actually something which is required. So therefore, we have this asymmetric system when it comes to taxation. Equity gets better benefits, debt does not get it. Just remember when that indexation part on debt went off, nobody is now investing in a debt fund because even if I get a return of 7 or 8%, I pay 30% tax on it. So I think this is something which has to be addressed. India is still a bank-oriented economy where banks are financing infrastructure and MSMEs, priority sector, every particular sector. We are not in a stage where we can say, let the market decide. So I think today we have this crazy situation. Banks don't have funds. So what do? We have liquidity shortage. RBI is actually going in for OMO. So what are you doing? You're actually you're printing money and giving it to the banks. So this can be a short-term solution, but I think in the medium term, we really need to think seriously about it because as we are spreading financial literacy, people are becoming more perspicuous. They're saying, why should I go for a bank deposit? Let me go to the market. Some of them went to FNO and they burnt their fingers out.
And there is clearly a generational shift also.
Absolutely.
No, I just, apart from the tax part, I think if you just see for example, the bank deposits are basically a tax even therefore you can encash them. That is opposed to mutual fund, which is basically when you redeem them, you are taxed. So I'm not getting into the tax part, that's obviously there. But there is another angle to it, which is very important, is that UPI transactions. India is now actually 70% of India's GDP is now UPI transaction. So what is
70%?
70%.
70%.
Yes.
Please take note of that number.
What is happening is that CASA, which is basically the low-cost deposit, is that money is actually now used more of a precautionary motive. So when you are making a payment, that money is going out from my bank to going to other bank, and that has become actually significantly unstable across the banking deposit system. The overall pie may change, may not change. So that is another aspect we need to take into consideration. And regarding the deposits part, I think the banks actually are doing, if I give you some statistics, the total number of depositors in the banking system, total number of accounts is more than 200 crores and the credit accounts is actually around 30-35 crores. So we have to support these depositors in terms of a fair return. A large part of them are also senior citizens because India doesn't have a proper social security system. So I think these are intricacies which we need to solve, but this requires larger discussion.
Just one statistic.
Yes, please.
Around 40% of your fixed deposits are held by senior citizens. So they also have a large spending power. You give a lower return, automatically your spending power also comes down. It will be affecting your consumption growth and GDP growth.
So maybe since there are two bank economists, I can give a slightly counter view.
Okay.
I think banks, this idea of that the government has to help you and taxes should be even across different asset classes, yes. Initially you needed to encourage markets and so on, so they were given a tax advantage. And the move is towards simple system tax and even across sectors. We'll see something happening there. But I just want to remind the bankers over here that they were so scared when repo rates were falling. You know, they were really worried that they have to pass on to loans and then they can't, cut deposits and so on and so forth. And what will happen to their profits? But they've done very well over this last 2 years during this macro cycle. So they have many
respond to that.
Just one data you want to show. Total banking profit in FY14 was 80,000 crore. Today the public sector bank profits are more than the private sector banks. In the last 9 months, the private sector bank's profit is 1.5 trillion. The private sector bank's profit is 1.2 trillion. And this number is going to cross 4 trillion in this year. So from 80,000 crore to 4 trillion in a decade. So I think Indian banking is significantly profitable, they are investing, they are giving credits, and of course they are mobilizing.
One round of applause for that about the banking sector,
but one
since
thing,
we are
Siddharth,
at a banking event.
No, I'm not talking of it from the point of view of banks being profitable or not. The final thing is that are we giving a fair return to the deposit holder? Banks cannot give it today because of this entire transmission process which is there.
So what should be done, Madan? Give us a prescription also.
No, the prescription is simply you give the tax benefit. Because today, lots of people, Ashish won't like it, but I'm
Can we
saying
do
this.
an experiment here? Those who believe that there should be a tax break on fixed deposits, please raise your hand.
All debt instruments.
All debt instruments. Okay, you have your answer.
No, because again, I'll give you a status. We carried out a study to find out what happens to IPO money. Everybody says that equity goes into capital formation. Now, we had looked at the last 1 year IPOs, kept the OFS aside. Only 1/3 goes for investment. 1/3 is used for repayment of loans. Another 1/3 is being used for working capital purposes. So this entire myth saying that you have an IPO, in capital formation happens, my capital formation rate is stuck at 31%. That's not increasing. So
Madan is making these points at the NSE, by the way. Let's not forget that.
No, but then banks have Indian banks, the NIMs, the net interest margins are very high internationally compared to internationally. We talk about AI and cost reduction, so more efficient. And then they can share the gains with the depositors. They have to compete for deposits. Right?
But do you support the idea of tax breaks?
I don't think that should be the only thing. I think eventually you should move to even taxation of all asset classes. But that bankers should not ask just for that or rely on that. There are many other things they can do. And the point is that they have done it over the last 2 years and they made good profits.
No, Ashima, I don't think it's possible. The only thing I have to do, I have to increase the rate, which I can't do today. At which you say you go at 2%, NIMs don't go at 3%. Then what happens to the shareholder? Every bank is listed. The share price will fall down and again we'll have another problem.
Somakanti, why don't you have the last word on this particular point?
No, I think I stand somewhere in between. I think, yes, deposits should be supported at the end of the day, but that could be there could be some policy prescription whereby it's up to a limited extent. I think that because of the fact that at the end of the day, this is also important for the overall banking system. But my larger point is that I think we have a strong and resilient system. We are doing quite well, and maybe some minor tweaks here and there will get us there. That's what I want to add.
And also banks do have a very loyal set of deposit holders still, the senior citizens, and they're all getting good, positive, real interest rates today. We are used to 12% and so on, but today inflation is 2%. So you are getting a good, positive, real interest.
No, but again here I would like to say if you look at RBI's what you call household perception of inflation, it's 6-7%. And if you go to the market, even I think inflation is 6-7%, it's not 2%. I'm still paying 50-60 rupees for onions, potatoes and tomatoes.
Yeah, I think that is the trouble. Household inflation expectations are irrational and they refuse to believe, all of us refuse to believe that inflation can or will come down in India, and we need to make that perception shift.
Siddha, let's put it this way. All of us in this particular room, suppose our employers tell us, inflation is only 2%, your increment will be exactly 2%. How many of us will agree? All of us will say that we can't live at 2%. We want, inflation is 10%. That's the right way to gauge inflation.
Okay, I had many more questions, particularly on Gen Z's consumption behavior, saving behavior. Because Business Today did a very detailed Gen Z behavioral analysis across 34 odd questions all across India for our anniversary issue, and some of the findings that we had were particularly on fixed deposit versus stock market investment were eye-opening, but we have run out of time. I thank my economists friends here on the panel for making this a very, very lively and interesting discussion, and for all of you raising their hands. It's good to expect more, but reality could be something else, so we will live with that. Thank you once again for your time with us today. Really obliged. Thank you.
For that fantastic session, huge round of applause. May I request you to stay back, and I'll request Mr. Siddharth Basu Chatterjee, publisher for Business Today, to please walk up to the stage to present a token of appreciation to all our panelists right here. Warm round of applause, ladies and gentlemen, for this brilliant panel. Thank you so much, Siddharth, for hosting it such well. everyone. Thank you so much, Siddharth. Ladies and gentlemen, we'll move on to our next session now. And this one is called NBFCs for Viksit Bharat. As India advances towards its vision for Viksit Bharat, the RBI has now allowed consolidation, greater scope for M&A financing, and encouraged increased credit flows to large corporates. However, India's development story cannot be bank-led alone. To ensure the growth is inclusive, last mile, as well as resilient, the NBFC sector must also play a far more decisive, a larger role. This session will examine how NBFCs are uniquely positioned to bridge critical credit gaps and can complement banks, unlock new growth corridors, and strengthen India's financial architecture, making them indispensable for realizing the vision for Viksit Bharat. For this session, please put your hands together for our next set of panelists. Mr. Guneet Chadda, founder APAC Financial Services, former CEO Deutsche Bank. We also have Hitesh Sethia, MD and CEO Jio Financial Services, Sudipta Roy, MD and CEO L&T Finance. And to moderate this session, I'd like to call on stage Shail Bhatnagar, Chief Analyst and Editor for Markets Business Today, and Abha Bakaya, Consulting Editor for Business Today.
All right, let's dive right in. And let me kick off with you, Hitesh. Yes.
Sure.
You know, when you're looking at it from your vantage point and at JFS, and when you have a wider view when it comes to the financial space, how are you seeing yourself as in the company playing a key role in shaping financial services?
Yeah. See, our view of financial services, I mean, we are what I call a late last entrant to this game because other groups have been in this game for a long time. Our view of financial services is we need three things: deep capital, deep tech, and deep trust. Those are going to be the three determinants of making something relevant, something big. And you know, customer should not be limited by institutional boundaries of risk and capital constraints, because every institution has their own risk boundaries, has their capital boundaries. So the future could belong to platforms as well. So our view is deep capital, deep tech, deep trust with platform is probably the direction that financial services will take.
Ladies and gentlemen, one of the finest sectors in this current capital market expansion that we see is the NBFC space. A galaxy of top NBFC CEOs right here in front of us. And let's speak to Sudipta on one very important phase that the entire financial space is going through, is the mergers that we've seen in the PSU banking setup. We have seen now larger balance sheets coming in, stronger balance sheets being on the fore. Do you think this round of mergers should also hit NBFCs? Are we looking at specialized NBFCs maybe 5 years from now, maybe a reduced number?
See, I can't comment whether NBFCs should merge or not. I think probably that is outside my scope of speculation. But, you know, if you look at the NBFC sector is actually the spearhead of, if I look at lending for the last 2 years, right? You know, banks' credit growth has been about 11-12%, NBFC credit growth has been about 18-20%. And if you see, and if you ask the question between specialized NBFCs and diversified NBFCs, I think there is need for both. For example, in a specialized industry like microfinance, you require specialized NBFCs, you require focus. And that is why that particular area, you have specialized entities, again specialized entities which RBI also has a specific category for them. So that area requires focus. For example, in infra, for example, if you have an infra-focused NBFC, you know, you require focus on that area.
We've had a bad experience in the infra space somewhere from 2008 to 2013.
Yeah, but we see again a resurgence of some of the NBFCs going back into the infra space because there is a large scope of opportunity there. But last but not the least, you require a diverse set of NBFCs also, diversified NBFCs, because they bring the capital base, they bring the learning across segments, and they bring the customer flows in which they can cross-sell. For example, if you see just by number of trade lines opened, retail trade lines opened, 80% of the retail trade lines opened are by NBFCs. Yes. Almost 60 to 70% of the new to credit retail are by NBFCs. So the fact is that you cannot deny the sort of the hunter and the opener of a credit flow to the hitherto unexplored segment. That mantle is taken by NBFCs, and unless you have a diversified NBFC with a large capital base which understands credit across multiple segments, you cannot really do that. You require balance sheet size to go and open the new to credit. A thin NBFC, focused NBFC cannot pry open the new to credit with the confidence that a diversified NBFC can. So you have requirements across both the sectors. You need specialized as well as you need diversified both.
So keeping that in mind, and Guneet, let me ask you, would you feel that we need larger, more consolidated NBFCs? And in order to really create NBFCs that could be pillars of the economy, could be financial institutions, do you think perhaps further structural reforms of some kind are required? How do you see this playing out?
So, I would agree that we need larger NBFCs and the smaller NBFCs to come together, right? I don't think there can be any denying on that. Okay. At the same time, I feel that when NBFCs are still small to modest in size, they can actually focus harder and be specialized NBFCs in where the focus is. I'll give you an example. This whole MSME, right, as an area of focus for NBFCs. In fact, APAC Financial, which is the company which I founded, we focus only the micro end of the MSME. So it's that specialized. I've always held the view that, Federa plays one sport here, right? So excel in what you're doing, and there will come a time when you can broaden yourself and build, adjacencies in your sort of business set. I also think what specialized NBFCs can do, and specialized not by way of charter that this is an MFI specialized or infra, but in terms of your own business models. I think what specialized NBFCs can do is actually cater to the deep, difficult to do business customer, right? Because in many ways, that customer, because of access reasons, because of lack of trade lines, or because of their own peculiar needs very specialized NBFCs to come and serve them. So that was absolutely right. There's a role for both of them, but over time consolidation will come into play.
Right. Hitesh, you are the newest kid on the block as far as the fresh set of NBFCs is concerned, and you sit on one of the largest databases on the world as far as the phone backend is concerned for your major business group. How do you see the landscape of NBFCs changing in this time of artificial intelligence? What do you think is the roadmap for the next 5 years?
No, thank you for that question. In fact, yesterday only we launched our what we call agentic marketplace. See, again, when it comes to artificial intelligence, there is a lot of discussion. Some people believe there is a lot of fraud. Anyway, that is for investors in the artificial intelligence. As consumers or users of artificial intelligence, I think there are two vectors. One is AI for the organization, which I think everyone is doing it in their own way. We are also certainly doing it, whether it's in the area of customer service, marketing, operations, etc. We have to use artificial intelligence for customers. I think that's when diffusion of technology and real advantage can come. Can we use it to simplify the cognitive load that a customer has to go through when making financial decisions? Because all said, financial decisions are complex decisions. Buying an insurance policy, buying an insurance policy or making an investment. For this room, it's probably going to be easy. But for common man on the street, it's really tough. Going through the fine print, etc. So can we remove the cognitive load? And there, I'll just make 2 points. Within the world of artificial intelligence, you have LLMs which are probabilistic, which is good for deciphering the intent of the customer. But a large part of financial services is deterministic. My account balance is a very deterministic number. It's not a probabilistic number, and that is the case for most of us. There you have to use ML models. So I won't say it's just AI has become now a common word and therefore let's change the world. We have to be careful about what the use cases are and what can it solve for the customer. What it can solve for the enterprise, I think, is known and is being used actually in a very extensive way. So yeah, I would think, yes, there are a lot of use cases and we have to solve for customers.
Guneet, where's the opportunity for NBFCs vis-a-vis banks? Where's the white space? You know, while they perhaps are lending to large corporates, or while perhaps we're seeing banks lending in particular verticals as well, infrastructure, green finance, affordable housing, so on and so forth, where are the corridors perhaps that can still be unlocked?
I think each of the ones which you mentioned, right? And I still say, wherever it is difficult to access, wherever it is difficult to assess the income, wherever it is difficult to customize a product, I think NBFCs are more agile and probably more able to service that customer. Now, obviously, over time, as digital footprint builds of that customer, the options will increase and the difficulty factor to service them will come down. It's logical, right? But there are many initiatives. And I would actually go ahead and say that for a country as vast as India, right? And by contrast, when I look at Singapore, which is where I was previously, right, with 5 million people, there's only so much you can innovate in terms. Here, there is niche in every single area of the addressable market. The problem comes when NBFCs say, I want to deal only with prime customers, only in urban areas. And then the question is, I mean, are you for real? I mean, how are you going to compete with the banks on that? Okay? One more point, if I will just make. I mean, I see this whole very topical in terms of whether large NBFCs should become banks or not, right? And by the way, I'm in the camp that they should, right? So I could argue on that. But I will make a point. Sometimes, and I still remember a dialogue on this many years ago, and it was a Temasek-sponsored event, and the dialogue was about why does Alibaba do what it does, and why does one of the big banks in Singapore can't do? And the difference is, do you really want to be regulated and become a bank to the extent of the compliance costs in banks and everything else? It's not to suggest that shadow banks or NBFCs are non-compliant, but sometimes that wish to become a bank comes with its own consequences.
That's true. Sudipto, coming back to you, the two buzzwords in today's business environment, one is artificial intelligence, the other being Viksit Bharat 2047. We are still about 21 years away from that, but this is a credit-hungry country where the digital backbone is now in place. For NBFCs in particular, how do you see the roadmap for the next decade or so?
I think that's a very interesting question. And if we do a little bit of a back of the envelope calculation, right? Viksit Bharat, we are talking about a $30 trillion size of, ballpark, $30 trillion size of economy. Now, if you see the overall sort of credit in retail credit, and let's focus on non-food retail credit, it's roughly about $2.5 trillion right now, about 70-80% of the Indian GDP. And NBFC's share out of that is 0.5. Now, if I were to say that in 2047, when I'm in Viksit Bharat, I want a credit to GDP ratio of somewhere between 130 to 150, which is a fair number for a developed country, right? Some countries are very high level, but I think that's a safe number as well. So we are talking about a credit base in 2047 of anywhere between 40 to 45 trillion US dollars, right? Now, if I were to say NBFC's current share is 20%, NBFC's share, the way NBFCs are growing, 18 to 20% growth compared to a bank's of 11-12% credit growth, the NBFC share should be about 30% by now, which means NBFC's share of the entire credit in the GDP should be $17 trillion, up from $0.5 trillion. Now, if you do a CAGR of that, NBFCs will have to grow at 18 to 20% for the next couple of years. Now, continuous 15 years of growth at 18 to 20% is difficult. It is not easy. But the fact is that, if the NBFCs manage to do that, I think 12 to 15% growth rate is quite possible. So you are looking at a base of about 12 to 13 trillion US dollar of credit base in Viksit Bharat. Now that's basically taking the size almost 20 times from where it is today. So frankly, every NBFC in India, whether be it an upper layer NBFC, middle layer NBFC or base layer NBFC, if you have to get to that $30 trillion, you're talking about 10 times the size of that. Just simple maths. Now, obviously, that is the roadmap. Now, for that roadmap, you need a lot of regulatory support, you need a lot of government support, and you need a lot of flow of capital. And frankly, very good risk management practices, because accidents slow you down, right? So you have to avoid accidents if you have to go there. And obviously, you require a benign geopolitics.
So let me get both of you in on this as well, in terms of the biggest challenges we're trying to solve and to build on what Sudipto said as well. Hitesh?
So, if you ask me in terms of the roadmap, just building on what Sudipto said, I think first and foremost, risk management is super critical, because at that pace of growth, the guardrails have to be really, really strong. Second, I would think in 2047, at the size at which Sudipto mentioned, and I agree, if an economy has to double, triple, quadruple in sprints of 5, 7, 10, 15 years, financial services will grow at 1.5x of the GDP growth. That's been historically the case. We look at all countries around the world, that's been the case. Now, whether the construct as we see it today, NBFC, upper layer, middle layer, banks, etc., will exist at all in 20 years from now, I don't know the answer. And our regulator has been absolutely fantastic in making sure that they are a step ahead of where it is. Again, if you look at the last 70, 80 years, not a single Indian bank has failed, and our regulator has been absolutely fantastic.
I think the innovative lab at RBI for the fintechs is something that is a world beater.
Yes, absolutely. That is one example. You look at everything else that RBI has done, or the quasi-regulatory setup has done, DPI, a lot has been spoken about. I think it's all fantastic. So, risk management surely has to be really embedded on the ground. Growth opportunities for credit growth is going to be absolutely phenomenal. Whether it is NBFC or bank, I think that is less relevant. What is going to be more relevant is whether you're current in your technology or whether you have a legacy mindset, because the future is going to belong to players which are more agile in technology and which are able to make technology relevant for customers. I think they will be the firms that will grow.
Ganeet?
Yeah, I mean, cannot disagree at all with what you say. Absolutely, right? There was a point which Sudipto made on regulatory support. I think for any industry, and NBFC is no exception, to grow 10x to 20x over the next 20 years, you do need regulatory support. And so what do I mean by regulatory support, right? It could be anywhere from a liquidity backstop to prevent those Six Sigma events where suddenly NBFCs find themselves exposed, right? And it may have very little to do with NBFC's risk management, but what may have happened externally. COVID was a good example, right? You need that, right? Two, very often, I think it would help to get any asymmetry in terms of regulation between HFCs and banks and NBFCs to be done away with to the extent it is possible feasible. For instance, why is SARFAESI not available to NBFCs below 20 lakhs when it's available to HFCs and available to banks for that same customer, for that same product in the same geography? You have to ask the question. So, I think regulatory support will be needed to accomplish those plans. And a third dimension is, if NBFCs have to grow at 10 to 20%, and there are very few listed NBFCs, right? The large ones obviously mostly listed, but there's a large group of middle and base layer NBFCs which are not listed. Where's the capital going to come from, right? So I think having a more supportive and benign approach to private equity, not being in control of NBFCs, but to be able to fund different NBFCs in size, right, is extremely important, because that will bring capital, because without capital, you will not be able to grow. Now that may be less relevant to you, and less relevant to you, but for most of the 10,000 other NBFCs which exist, capital is oxygen. You don't have it, you don't grow.
I think over the last maybe 8 odd months, we've seen 2 major transactions happen in the NBFC space involving foreign capital. To you, Guneet, the next 5 years, do you see, maybe Asian giants from the Japanese economy or, the Middle East sovereign funds spending heavily in this space to take maybe large minority stakes?
Absolutely, Frankly, I think we are just at the tip of that right now. And I think some of these sovereign wealth funds, some of the global investors need clarity as to, but can they own, let's say 20, 30, 40% stakes in different NBFCs, even though they may not be controlling.
And there is a major issue brewing with
and
one
I
of
think
the...
clarity on that will help. So if the clarity is on the positive side, I see much more private equity and sovereign wealth funds coming in. If, however, a single PE can only own the 20 or 26% stake in one NBFC, then we'll be constrained on that. So that's what I mean. Regulatory support to grow NBFCs through uniformity and removing some of the arbitrage which exists between different entities on the capital side, on liquidity backstops and Six Sigmas, I think will really help this sector to prosper. And as we said, this sector is 20% of the credit growth in the country, right? So it's not a small sector.
Hitesh, are you building a financial super app? And as we move to more of a platform-led play, would you like to tell us more about it?
So again, I'm very careful with the word super app because it means different things to different people. All I can say is we are building our own manufacturing capabilities, quote unquote. We have the whole lending vertical, investment, insurance. We are working with Allianz, investment with BlackRock. And for day-to-day transactions, we have a payment bank, etc. So those are our own products. But given the familiarity of Jio brand and reach to 500, or now with Jio Hotstar, 700 million customers, we believe that we can offer a wider choice to the customer, and therefore the platform play is something that we announced yesterday. We are trying to bring as many broad and deep products as we can to consumers and simplifying finance for people intelligently. That's what we want to do.
Guneet, because the other two gentlemen are listed, I'll spare them this question, come to you. Balance sheet growth, if it's linear along with growth in employee base, as we've seen in the last 30 years in the NBFC space, is fairly well documented. But the next 10 years or so, given the preponderance of artificial intelligence, do you see balance sheet size increasing without the commensurate growth in number of employees?
I think it has to. If you look at the operating costs to AUMs of many of the NBFCs, right, it is very high. In fact, operating costs to AUM is a multiple of the credit costs to AUM, right? And so the question is, why should an NBFC have OPEX to AUM at 6, 8, 10%, right? Because ultimately, who bears that cost? The customer bears that cost, right? Today, the customer is still willing to bear that cost because the customer may not be bankable with the banks. But tomorrow, the customer will not pay that cost. And so it's inevitable that NBFCs have to adopt the best of technologies which are coming into the market, whether it's AI, whether it's machine learning, whatever you want, right? And I think all of us will be beneficiaries because, in my view, on a steady state basis, your OPEX should be as much as your credit costs are, because then you're really getting competitive in serving the customer with a price point at which the customer benefits as well. And ultimately, we have to always keep customer as the first sort of target. You know, our processes, our risk management, everything else takes the backseat. The customer has to be where all our focus has to be there. So I think it's an imperative, right? And I also think that while all this debate's happening, AI in US versus AI in China it's a beneficiary, in US it may or may not be because of the capex. I think all of us sitting here are going to be big beneficiaries. But if you really want to drive AI, get the younger people out there to come and sit here and get the older people like me to go and sit there. I truly think that's also needed.
Okay, so the closing comment from you. I think we've discussed a whole range of things. I'd also just love to know, perhaps in the more immediate future, what's exciting you the most in terms of where the growth is going to come from. Everyone's waiting for financial services to be the major driver and indicator of us moving to the next level.
See, I think the major driver of growth over the next couple of years, obviously, I'm very excited about rural growth. Because we are a very large rural lender, almost 44. In fact, we are one of the largest NBFCs in rural lending across a plethora of products. And rural income finally has started going. You know, this year we are seeing a 7-8% growth in rural income. A couple of years of good rainfall has given a good impetus. You know, water table levels are stabilizing. You know, reservoir levels are at a 3-4 year high. So I do see, though, you know, rural sort of growth has been, overall rural growth has been about 3% odd, right? But I see this probably stability remaining, and this year also monsoons hopefully are good. I see this sustaining. And, you know, one of the things which I do, and I travel quite a lot in rural areas, what I see is that, for example, in South India, there's no real rural anymore. South India actually is semi-urban, right? And urban. The rural South India is making that. But I see that trend also picking up towards part of the north, and I do hope that it diffuses toward the east. So I do believe that rural economy and rural lending and rural consumption will go through a major uptick in the next couple of years, which will be net positive for the entire lending ecosystem and more so for NBFCs like us, which have a large stake in the rural lending process.
All right. Look forward to that and all that we have in store with AI, with technology, and of course with a growing economy. Thank you, gentlemen, so much for joining us here today. A wonderful conversation. Could I have a big round of applause, please? Thank you.
Thank you, everyone. May I please request you to stay back while I request Mr. Siddharth Basu Chatterjee, publisher of Business Today, to come up on stage and present a token of appreciation to each of our panelists, while we also request everybody to give a big round of applause for this fantastic panel. Much, everybody. We will move on to our next session now, ladies and gentlemen, and this one is titled New Model for Microfinance. And in this conversation, we will deep dive into the future of financial inclusion, the economics of microfinance, and the evolving role of mutual microfinance institutions in the India credit ecosystem. The MFIs, as you all know, are undergoing a structural shift at this point in time. Faced with the rising defaults in traditional unsecured lending, many of the MFIs, ladies and gentlemen, are pivoting towards secured products and also diversified business models. They are expanding their role as business correspondents for the banks, strengthening their presence in secured lending segments such as mortgages, scaling up gold loan portfolios as well. And it is this transition that reflects a broad strategic recalibration towards balance sheet resilience. And in this conversation, we will deep dive into the future of financial inclusion, the economics of microfinance, and the evolving role of MFIs in India's credit ecosystem. For this session, ladies and gentlemen, let us give a big round of applause to welcome our next panelist, Dr. Alok Misra, the CEO and Director, MFIN, to please come up on stage for the next panel. We will also request on stage Ravi Narayanan, MD and CEO, SMFG India Credit, to please come up on stage as well. And I will be moderating this session. Sakshi Batra, Senior Associate Editor for Business Today. Good evening once again, ladies and gentlemen. We are looking at how right now India's microfinance sector is going through a brutal stress test. We have seen the NPA spiking up to 16%, over 55,000 crore rupees under stressed assets at this point in time. And to overcome this current situation, we're looking at a complete overhaul, a structural shift that is undergoing at this point in time in the MFI industry. How we used to see a large group, unsecured lending, that shift is happening to asset-based resilience now, focusing more on gold, on mortgages, and also banking partnerships as well. And in this conversation, we're going to be trying to understand how the next phase of growth will unfold in the MFI space. So, Dr. Saab, I'll come to you first. And I want to understand from you clearly, when you have noticed these changes over the last 2 years odd, when more of the stress has been witnessed on the balance sheets as well, what is it that you have been able to pinpoint at is the core issue? And do you see at this point in time there is a true need for a structural shift, for a complete new model of MFIs?
Well, thanks. First, before getting into the reasons, let me tell that I don't agree to your brutal use of the word brutal, because you said NPAs are 16%, but we generally in microfinance industry, we use portfolio at risk numbers, and portfolio at risk 1 to 180 days as of today is 4.7% as of January. So there is no use of such strong terms. It might be good to awaken the crowd, but that's not the fair description.
It's not the right picture right now?
Yeah, it's not the picture at all.
Okay.
And second thing, when you said about what were the reasons, because you are referring to the spike in credit quality ratios in the month of May, June it started, 2024. So let me take you down to a few things, because I would be worried if it would be structural shift, as you said, what microfinance should do. I would be worried and thinking of structural shifts had it been due to your own making, had it been due to gaps in credit underwriting, more than external factors. But let me remind you 4 or 5 things which happened sequentially. Yesterday in a meeting in Department of Financial Services on various issues, there also the same things were discussed, and I listed the same things. The first is the severe heat wave in June, May-June of 2024, followed by the agitation in various states by the non-state actors like Karjamukti Abhiyan, then the unwanted interventions of which finally went in our favor in Karnataka, followed by Tamil Nadu. So all these extraneous factors, the sector finds it difficult sometimes to deal with. And you would have seen a day before, on Friday, the Bihar has passed a bill. So when you operate in a situation where you are lending to, and let me tell you the size of it, you are lending to 7 crore as of today, low-income women clients. And if there are 4 persons or 5 persons in a household, you are touching the lives of 30 crore people. That is almost 25% of India's population. And they are marginalized people having household income less than 3 lakh rupees. You are giving unsecured, doorstep credit to them. And who is the regulator? Reserve Bank of India. What we do as an SRO, we mandate more rules to that. And on top of that, if you create a situation where we are not clear whether the regulatory regime of RBI will operate or state governments, despite a very clear Supreme Court judgment that this is the domain of Reserve Bank of India, the sector will get confused. So these are the things which are policy things which sector cannot solve. And when you talk about structural shifts to asset-based, I think the whole concept of microfinance was that we are reaching the poor, low-income poor, who don't have assets to pledge to banks. And if you say that you go back to asset-based lending, I think that will be a very retrograde step. We need to solve these problems at the policy level to have a coherent, unified policy, because if you don't touch it, you may talk about GDP growth of 7%, you may talk about 5 trillion economy, but if 75% of your population, which belongs to this segment, are not raised, if the rising tide will not lift all boats, and we will have issues. So I will stop here at the introductory remarks. You can follow it up.
So clearly, one thing is that policy and regulatory front, that's where the initiation has to happen. And second of all, very importantly, like you marked out, that asset-based structural change should not be followed, at least at this point in time.
Well, for entity specific, whatever limited scope the RBI allows, 25
25% or something, you can diversify to give strength to your balance sheet. But for microfinance to move to asset-based, that will be very retrograde step. It should not happen.
What would you say, Mr. Narayanan? Do you think there is a change needed at the traditional lending model at this point in time? Does that need to fundamentally really change, structurally change, or should one really look at a policy change itself?
So let me start by saying that I completely agree with Dr. Saab in terms of how this entire episode or set of episodes have kind of come through, right? I don't think microfinance as an industry has anything to do with how it has been interpreted in the policy circles, right? I think the way it has been done is, जब मंत्री संतरी बन जाता है तो प्रजातंत्र के लिए प्रॉब्लम है, right? I think that's the way one should look at it. I think everybody has a certain way of going about doing things. Credit invisible population was to be brought into formal inclusion of credit. I think that was the structural foundational principle of microfinance. And I think as a country, we have gone far beyond the expectations that were set. And hats off to every small, big, medium-sized microfinance participants in this industry, as well as right up to the largest banks which participated in that. So having said that, I think it is important to understand that it is an evolution, definitely not something which is going to structurally shift. Yes, aspirational Bharat will always look for asset building. That is a natural evolution of human psychology. And therefore a household in Bharat, way beyond starting with a group of women, would want to go into some kind of an asset building. And that should be supported in terms of whichever entity has the balance sheet to support it. And that diversification is a natural play out for any financial intermediation, which means that they can get bigger, they can get more people to, absorb credit, and therefore, in that sense, bring visibility to the credit invisible. And I think that is where we should leave it. Unnecessary interventions in terms of trying to shift, change, obfuscate should not be done. Having said that, I would also tip my hat to the same set of local governments who are encouraging customer protection and who are ensuring that unregulated entities do not interfere with the way credit is given out and how credit is absorbed in the system. And I think that is the biggest advantage we have seen. Yes, they could have done it in a better way, but I guess that's how evolution happens, that there will be stuttering, there will be hurdles, there will be breaks. Sometimes what happens is that you get a new car and you have a sports mode in it and you try and run it on the road without realizing the road has a lot of potholes, right? So then you realize you need to ensure that the car doesn't get spoiled. I think that's what microfinance has been. It has done a wonderful job. I don't think there are many countries in the world which have done this consistently, sustainably. And at the end of the day, you started out by saying stress. Again, I will amplify the point Dr. Saab made as a participant in the industry. I think there are phases, there are cycles. We have to participate in all these cycles. Sometimes the peak cycle yields kind of always create a hoo-ha about it. But if we are able to sustain, create non-volatility, I think structural shift to one side, I think all of us, including policy makers, should look for non-volatility as their point of arrival.
Okay. Dr. Alok, how much of stress is still there in the system? And can I ask you, is the peak stress already behind us?
Well, as I said, the new portfolio, which has been disbursed in last 1 year or so, that is at 4.5% par 1 to 180 days. So that is normal. It may come down to 3.5% maximum, I think. That's become the new normal. And on the portfolio which has become, you can say, ready to be written off, because the major players in this sector are NBFCs, large NBFCs and NBFC MFIs, and they are under the Ind AS system of accounting. So you don't follow the IREC norms, you follow the expected credit loss method. And whatever was there that has already been provided for, taken hit in the balance sheet. So financial hit has been taken. And the new portfolio doing better. I think we are almost, when you say, are we past the peak of the trough of the crisis? I think that passed 6-7 months back. Now the only thing which is expected is the funding winter which the sector is going through. If that funding winter turns into summer and autumn, first autumn and then summer, I think we'll be up and dry. And I cannot reveal much, but I think next week you will hear good news on the front.
Next week we will hear good news on this front as far as the end of funding winter is concerned. But Mr. Narayanan, help us understand, when we look at, asset-based approach, especially on gold, mortgages as well, does that somehow solve the problem of over-leveraging that is still there in the country or enhances it?
So I think, regulation, MFIN, self-regulatory, I think those kind of guardrails which were put in about a year plus back, I think all of them have stood the test of time. And I think they have held very sustainably. So again, hats off to all those elements that were brought in. And which is where I go back to the previous panel which talked about how our regulator is, I would say, the best in the entire globe. So therefore, in terms of what has been achieved in the industry of microfinance is A grade. Second is in terms of consumers. Sometimes we kind of look at the industry and forget the consumer. The purpose all of us exist is the consumer, right? At the end of the day, the consumer has aspirations, right? And the consumer is also participating in the Indian psychology of gold, right? So they do have gold. Now the gold prices have gone up. Now if they want to monetize, and the best time to do it is, why shouldn't existing fraternity of the industry who was there in the rural market not extend that business, right? And that service. And therefore, I think gold loan is a natural gainer of this entire evolution in terms of what is happening. Second, in terms of mortgages, Indian culture says, apna ghar hona chahiye, right? And therefore, if you are going into a situation where either you have an existing small setup which can give you monetized advantage, or you want to build a small setup in terms of taking a loan and get your own house, I think we all participate in that. Again, structurally, yes, I would say it's an indication of shift, but that shift is about how to take care of the consumer's aspiration. Bharat is now a bigger consumer than the rest of the country. I mean, if you watch a program like Indian Idol, probably 85% of the participants there, or maybe 90% of the participants are from Bharat, and they make us proud. And therefore, talent, aspiration, the consumption, and the need to grow is as much displayed in rural markets as in an urban market. And as a company, we are a very large rural player. I know 70-75% of my business happens there. So I know what this Bharat is all about. And therefore, microfinance shifting towards mortgages and gold loan is a natural, structural, balance sheet aided shift. And I think we should encourage that. That doesn't mean microfinance is going away. What it does mean is that the presence of an intermediary in that market is helping the aspiration of a local consumer.
So you don't fear that you will be losing out or diluting the last mile mission that you have?
Not at all. Not at all. Not at all. Because again, remember, what is a microfinance institution? A microfinance institution is somebody who knows that borrower, who knows that household, who knows that rural ecosystem, who knows what is the ebb and flow local economy there. And therefore, who else can be a better intermediary in terms of credit visibility than a microfinance entity? However small or big, it really doesn't matter. It's a form factor, right? And at the end of the day, that is what is the difference they are making. And if they are able to extend credit in another service, so be it.
Dr. Alok, help. Yeah, sure.
No, I think I just wanted to butt in on I think you, in your question to Raviji, you asked about over-leveraging. So this, let me put to rest, clarify with data, the over-leveraging part of it. Lot was published in newspapers in 24, then again it abated in 25. So when you lend to microfinance, as per RBI regulations, you have to see that the repayment obligation of the client is less than 50% of the annual income, so that the 50% is left for meeting the basic household needs. Now, but 50% is the max. But when we heard about over-leveraging and all that, and we saw that 7 to 8% of our roughly of the sector's client could be a little in the danger zone, they would have over-leveraged and all that. In November 24, MFin as an SRO, with help of all the practitioners, we put in guardrails. And our guardrails further specify that the total loans from all microfinance players should not exceed 2 lakh rupees to any individual client, plus not more than 3 lenders should lend to it. But despite that, there will be occasional leakages. And again, here I will come back to the policy architecture. Because after 2017, Supreme Court judgment, which prohibited use of Aadhaar, now you can do e-KYC, where big institutions can do e-KYC. They can identify that, yes, X is X, but you cannot report that number to the credit information company. Because if you cannot report it to the credit information company, the other lender who is going to lend to me will not be able to dedupe based on the e-KYC, Aadhaar-based e-KYC. So after the 2017 judgment, the entire sector had to move from Aadhaar. 99% of the sector had gone to Aadhaar. Now we had to redact it, come out of it, and go back to voter card. And voter card has so much of issues. For example, if SIR happens in a particular state, old numbers are redacted, new numbers come in, new formats come in. So how do you dedupe the clients? So that's a challenge. And we have now, again, let me update that in yesterday's meeting, KYC was a central agenda because we have been flagging. So now we have suggested, okay, because you cannot go against the court judgment, then at least allow the last 4 digits of Aadhaar, because last 4 digits of Aadhaar are common to many persons. They, in combination with other factors like age, demographics and all that, can still yield a much better result than the voter card. So that matter is under consideration by the government. We have also suggested, I will not get into the details of tokenization, that Aadhaar tokenization through blockchain technology can also be used. Government is actively considering it. Hope that will solve. But despite that, let me tell you, because every quarter, as an SRO, we take all our member institutions data, that in last quarter you disbursed so many loans, how much of the rules you violated, how much of the loans you followed the rules. So as of December end, the last data shows that 96.4% of loans in microfinance sector are within RBI regulation and MFin guardrails. So 1 or 2-3% slippages are still there, and that may happen due to technical oversight also.
Okay. Mr. Narayan, you've been partnering with fintech platforms like PhonePe and to give out collateral-free loans. Give us an understanding of how are you ensuring that, there you do not have a repeated issue of an NPA because of easy-to-avail digital-first lending now there. How are you ensuring that the problem does not also occur at that technical level?
So the answer is very simple. The entire control of credit risk and scoring is with us, and therefore the fintech platform is merely a marketplace from where sourcing and identification or prospecting happens. So I don't think there is the regulation is very clear. The regulation is clear in terms of ensuring that whatever comes through these LSPs all belong to us. The customer belongs to the NBFC, and therefore the regulated entity is 100% accountable for all the compliances that are there, including any aspect of risk and credit element. So therefore there is no, so in the continuation of the answer to the earlier question, the 3+ kind of over leveraged customer, I think we have now gone down to 4 or 5% of the overall, 3% of the overall. So which means that at the end of the day, whether it is coming through digital, physical, whichever way it is, at the end of, this is form factors at play, you know. The control continues to be at the NBFC end. And therefore, there should not be any issue in terms of concerns on compliance or portfolio deterioration or any possible future issues in terms of leveraged or over-leveraged customers. So I think all of that has been put to rest as the entire form factor of digital play has kind of evolved through the last, I think, 2-3 years now.
Fantastic. Dr. Alok, help us understand. Avendus Capital has come out with a data of projection of 10 lakh crore rupees of gold loan portfolio over the next 5 to 6 years for the industry at large. Where is that growth going to come in from? Where do you see that growth is going to come in from, and where the demand is going to come in from?
The gold loan thing?
The credit growth for MFIs.
In the microfinance sector, I will talk of limit to the sector. At present, as I said in the first part, that the sector serves around 7 crore low-income women, and the portfolio outstanding as of date is around $35 billion, which is 3,20,000 crores roughly. I think if there are not, industry has done its all. Now, if there are no episodic events, like the Bihar one might can unsettle, because I am seeing that every 3 or 4 years there is an episodic issue, which is beyond the control of the institution. If that doesn't happen, ceteris paribus, in that case, what we have internally thought about is that the sector should be somewhere around, I don't go too far, because in such a volatile, sometimes policy uncertainty atmosphere, you can't go to 10 years and 15 years down the line. But by 2030, we should be hitting somewhere around 7.5 lakh crores.
Okay. And rural demand, what is going to be the portion of that?
See, 75% of the total microfinance sector lending is in rural areas.
Okay, so
that will continue. That will continue.
Okay, so 7.5 lakh crores is what we are looking at by 2030. Mr. Narayan, also help us understand when it comes to the kind of innovations that you're doing at this point in time to again curb a lot of NPAs, asset-related issues. What are those innovations at this point?
So I think the start point has been ensuring that credit invisibility is removed. So that ensures that people are getting onboarded onto platforms which are formal in nature, which includes credit bureaus and other scoring elements. Then you overlay on it the technology part of it, which says that as you exchange more information, you are generating more data. And as that data comes into play, ability to compute faster or ensure that the data is parsed faster and so on and so forth gives a better understanding of the customer at the end of the day. That is part A. Part B is that as more and more individual intermediaries are able to share that information, whichever be that information, right? Starting with, the self-regulation in terms of 2 lakhs and, 3 lenders and less and so on and so forth. So that information overlaid with the understanding of who the end customer is, because my boys and girls are out there in the field, in the villages. They know these people. They know what is their land holding. They know what kind of cattle they have and so on and so forth. So that is something which helps in aiding and abetting understanding.
Sure.
All of this results in innovative approaches to give better credit. So that is what you are seeing. You are seeing ticket sizes getting more customers getting into 50,000 to 1 lakh kind of thing, which otherwise was much lower than that.
20,000.
And, as Dr. Saab just said, 75-80% of, it goes up and down for individual players, but 75-80% is in rural, and this is deep rural. I am not talking, something just outside a big city. So I think the innovation is in terms of understanding the customer.
Okay. Last word to you, Dr. Alok, and I want to understand, paint for us a picture over the next 10 years or maybe next 2 decades as we are approaching 2047. How many pure play MFIs will continue to exist, or the way to thrive in this kind of a growth phase is to become well-diversified, multi-product financial hub?
Well, again, as I said, that I will stick to my point that in such a complex environment, it is not possible for me to go to 2047. That only an astrologer can do. I can at best go to 2030, 2032, which I said earlier. But having said that, let me tell that when you say multi-product, in case of microfinance, see, credit is fine, so that is already there. Different types of products every player is trying. Insurance, already as through third-party tie-ups, we do credit life insurance and a few insurance. Savings is not allowed for NBFCs, so that will not happen. We are lobbying with PFRDA that earlier the Atal Pension Yojana and other things could be done through NBFCs, so that should be again restarted. If that happens, that will be happening. But I can only tell you that if this sector underperforms, then your gradual transitions of, then if you, the nano enterprises and the household enterprises, which 75%, because in India 65 million MSMEs are there. Out of that, I think around 63 million will be nano and micro. If our proprietorship firms, if they don't scale up, you will not have broad-based inclusive growth. So that is a sine qua non. That is a hypothesis on which we need to operate. The policymakers, the funders, the bankers, the NBFC all have to work together and don't make grandiose statements about what will happen in 2040 or 47.
Okay, thank you so much for those insightful words. Thank you so much. Huge round of applause, ladies and gentlemen, for both our panelists. May I request on stage Mr. Siddharth, Group Editor, Business Today, to please present a token of appreciation to both our guests at this point in time. And thank you so much for such engaging conversation. Thank you so much. Right. May I please request Siddharth Basu Chatterjee to please join us on stage to present a token of appreciation to both guests. Began, ladies and gentlemen. Next, we move on to the session that's titled Banking's Next Evolution. This session will deep dive into India's vision and roadmap to achieve a $30 trillion economy by 2047 and how the financial system must definitely evolve, the structural reforms, the institutional capacity, and the capital mobilization required to realize this ambition. Whether India needs more banks or a stronger consolidation, and how the $30 trillion aspiration can be sustainably financed as well. For this special panel, please put your hands together to welcome Mr. Dinesh Kumar Khara, former Chairman SBI, Rajneesh Karnatak, MD and CEO Bank of India, Nidhu Saxena, MD and CEO Bank of Maharashtra, and Zareen Daruwala, Group CEO PL Capital. For this session, I'd like to call on stage Shail Bhatnagar, Chief Analyst and Editor for Markets on Business Today, and I will be co-moderating the session with him.
Good evening, ladies and gentlemen. Let me start with a very interesting data. Mr. Khara is the former Chairman of State Bank of India. In the most turbulent time for the bank, October 2020 to August 2024, the bank, ladies and gentlemen, is up 74% in last 1 year, and 10-year CAGR is 21% on the stock. Bank of India, last 1 year, the stock has appreciated 85%, and Bank of Maharashtra 61%. These, ladies and gentlemen, are the comeback kids of the PSU banking sector. For those who read financial data over the last 6-8 months, many public sector banks have posted higher credit growth than private sector banks. Is this a pivot that we are looking forward to? This and a lot more is what we are going to discuss over the next 23-24 minutes. I'll start with you, Mr. Khara. It's been a wonderful journey over the last 3 decades or so. How do you see the next 5 odd years for the PSU space?
Well, I think the way the situation stands today and the kind of evolution of AI, which we have seen in the recent past, I think, one, the public sector banks have demonstrated that when it comes to fixing some of the issues, they are quite competent and capable of doing that. They have demonstrated that when it comes to risk management, there could be no better than them. They have already demonstrated that when it comes to technology, they are perhaps ahead of many. And also, they have not shied away from investing into technology. Of course, when it comes to banking, this is nothing but it's a proxy to the real economy. So, of course, they were learning, which were there from 2008 to 2014, wherein there was a challenge in terms of underwriting. There was a challenge in terms of how to resolve the stress assets. But yes, of course, ecosystem got evolved. The IBC, which was never heard of in the country, it came into existence. And it actually demonstrated its teeth also. That is one of the reasons why I would say that there was more responsible borrowings as far as corporates were concerned. So I think, having said that, I would also like to mention that now the new era for banking is going to be focused in terms of customization, which actually means that the data which is already there, it has to be put to use beyond the transaction processing. So essentially in terms of, we actually started doing it during the period of COVID also.
Yes.
We had come out with the algorithms, and based upon that we started reaching out to those who were in need of credit with the help of pre-approved personal loans. Those were the early days. We just tried out and it became a great success. So I think now with the new models coming in place, I believe that now the public sector banks would be in a position to really profile their customers and would be in a position to offer the customization to hyper-personalization, which is the intent, can become a reality with the public sector banks. The second very important component is the operational losses can be curbed to a greater extent, because these are the banks which go through huge amount of transaction processing. So with the AI overlay, this becomes a reality to have very effective PRMs in place, and also to have the alerts in place so that any fraudulent transactions could be avoided. Having said that, I would also like to mention that the more we are going into mechanization, the more we are going for digitization, and we are also facing the challenge in terms of cybersecurity. So I think there is a conscious effort on the part of banks to really generate the awareness towards the cyber. So I think my sense is that when it comes to risk assessment, the models are available which helps in terms of better risk assessment. There's a possibility to consume a lot of data from the structured and unstructured space, and also come out with more robust risk management models. So I think when it comes to underwriting, when it comes to risk management and for the operational risk, when it comes to the customer preferences and customer hyper-personalization, this is something which is going to be a reality. And with that happening, the ability of the public sector banks, because they have already got the distribution network which is spread across, because today creating distribution network is a huge challenge. They already have that distribution network, and banking is all a function of trust. So earning the trust very much requires that the presence of the brick and mortar also. It cannot be merely digital. So I think these are my initial thoughts, but
Sure.
I will pause myself here.
Sure.
And,
Rajneeshji, may I bring you in here? India is already poised to become the world's third largest economy. But when we look at the banks, of course, we are looking at all the positive parameters. But when we look at globally, we hardly have any bank in the global top 10. We have just 2 banks in the global top 100 list at this point in time. What do you think is the need of the hour? How do you think we reach there?
Yeah. So when we say that India going towards 2047 Viksit Bharat and reaching that $30 trillion economy, definitely a rethink has to be there with respect to banking also. How the banking can shape itself towards the Viksit Bharat 2047. Now we are approaching the 4 trillion mark, but to reach 4 trillion, which is nearly 7 times, 30 trillion, which is nearly 7 times, is something which we have to definitely think about. So if we say that only 2 banks are there, see, there are 3 scales on which the banks are parameterized in the global scenario. One is the total business, deposits and advances in dollar terms. The other is the asset book of the banks, and third is the market cap. So in all the 3 parameters, we'll have to look at how many Indian banks can be in the top 100 for the economy to be in 2047 as a Viksit Bharat. So what I see from that side, from the Indian landscape, is India is a very different country in the sense that we have a population of 140 crores. We have large rural population, semi-urban population, urban and metro population. So if we see the scheduled commercial banks landscape, lot number of banks are there. Now financial intermediation is also taking place through NBFCs, small finance banks. Lot of other guidelines are there. On the tap, banking licenses are there from the RBI also. So having said that, I would say that it has to be a mix of all, like small banks also, medium-sized banks also, and at least 4 to 5 large banks which can find their place in the top 100 banks in 2047 or maybe even before that. So that should be the take, and that should be the strategy from the, I would say, from the government and the RBI side, that at least 4 to 5 banks are there to support the large economy. And the thing with respect to the credit growth for the large economy which is there, and when we say the GDP growth is 8%, typically the credit growth has to be 2 times of that. So when we say GDP is 7%, the credit growth has to be around 14% to support the future GDP growth which is to be there. And for that to happen, and with that the kind of capital which is required for the economy, definitely large size banks are also required to support those, because at that juncture we will have some large corporates also who will be there in the country, where they will be requiring lot of the credit which will be required. And the credit should not only come from the banks, it should also come from the bond market, deepening of the bond market. Already we are seeing some structural changes which are happening around, and lot of money is moving towards mutual fund, insurance companies, pension fund and other kind of thing. So entire financial ecosystem has to be made big to reach that scale and size.
Right. Let me bring Zareen into the conversation. Ma'am, you've been a former banker, but now you head a very nimble organization which is deploying a lot of assets onto the digital AI side. As a relatively young lender into the market, what are the 2 or 3 sectors, maybe spaces where you think a combination of artificial intelligence and the new digital setup will make a difference over the next 5 years in the banking space?
Yeah, actually we are not lenders, we are an equity broking house, but nevertheless. So I think with all the announcements that are happening on the AI infra build out, we've seen the top two business houses talking of $100 billion each. We've seen Google talk of $15 billion, etc. And obviously AI is going to disrupt certain sectors, but there's an opportunity which will come in the whole AI infra. And couple of the areas where we see the opportunity really coming up is in metals and mining, silica, copper, palladium, alumina, etc. So companies which are engaged in these mining and metals and mining will definitely have big capex to cater to the AI infra that will get built out. Similarly, chemicals, hydrofluoric acids and hydrogen peroxide, all these. So companies again which are in that segment are going to benefit from the capex that they will invest. Data centers, of course, we will see, the transmission sector really stepping up enormously. We'll see the electrical entire value chain, the power and the thermal management systems. So on one hand, we'll see certain sectors sort of really having a struggle, but I think there's a positive side of that which will come up in the whole manufacturing and transmission and anything to do with the whole power and data center will benefit from this AI infra.
Mr. Saxena, I'll come to you. When we are looking at that $30 trillion vision of 2047, there's also an aspiration that the loan book will also grow 10x. But at the same time, we want to understand how do we ensure that the system does not collapse under bad loans pressure?
Right. I think that's very, very important point, that when we are having an aspiration to be a developed nation by 2047, and we are having an aspiration to be a 30 trillion, the story has to be a sustainable story. So how do we grow and how do we reach to that milestone that we have in mind? It has to be a very growth, I should say, which is a compliant growth, compliant to the regulator requirements, and using, keeping in mind all the underlying risks that you are going to be encountering, whether the usual business risks or when we use and leverage on technology to help us achieve those milestones, we are exposing ourselves to newer technology risks. So how we are understanding those underlying risks, how we mitigate those risks, and how we go about it. I think one point we should understand that today when we are around 4 and we are to grow 7 times the size that we currently are, while banks will continue to be an important player in having this enabled in the system, but bank alone will not be sufficient to ensure this kind of change that we are looking forward, countries aspiring. So it has to be, I would say, not bank dominated, but bank led. So there'll be other in the ecosystem, in the architecture, like the DFIs. They will continue to play a very important role. When we are talking about large infra projects, banks typically, if you ask me, the liability profiles are not long term. And when we are out to fund long-term gestation infra projects, we have problems. We have risk. We have regulatory concerns around that. So there'll be a role important from DFIs, InvITs, other innovative models will be required to see that along with banks, they also are growing and helping the country achieve this aspiration.
Okay. Mr. Khara, SBI and its sister subsidiaries control about 26% of Indian banking. You obviously have a 35,000 feet view of the entire sector. As far as artificial intelligence deployment is concerned, where do you think will the maximum value for money lie? Increasing business or cutting costs?
In fact, different stages it would have the different application. I think I will start from the fact that today when there is so much of clamor for mobilizing deposit and there are competitive instruments which are available for the bank deposit, perhaps first and foremost AI can be used for cutting the cost, both in terms of the fraudulent activities which actually becomes a drain for the bank's profitability, that needs to be addressed. And secondly, the right kind of underwriting through the better risk management, that is something where AI would be put to use. And also when it comes to hyper personalization, then perhaps that would be the next stage, where because in order to wean away the customers, perhaps that would be a tool which would be put to use. So I think it will be a gradual step. First and foremost, perhaps using AI for reducing the cost and maintaining the NIMs so that they are in a position to take care of all the stakeholders' interest. and continue to invite the capital, which is very, very critical and most important component for any bank, because unless and until, and also because when the capital comes in, they have to ensure that it is sweat well, and that is the reason why they have to ensure that AI should be put to use for improving its profitability also. So I think my sense is that first and foremost, with the help of cutting costs, they will maintain their names and profitabilities, and also increasingly they will go for hyper personalization so that they can compete with the other alternate instrument providers, maybe life insurance, maybe also the mutual funds, etc., etc. But I would also say that it's not that AI will be put to use only in the banks, it will be put to use even in insurance. And in case of insurance also, insurance is a business which actually is the right pricing of the risk. Banking is a business where you are there to take the risk, but calculated risk. Insurance is a business of the right pricing of the risk. So today when it comes to right pricing of the risk, even there also there is a scope. And if at all the models can be perfected, even the right pricing of the risk can happen. And also perhaps it will help in terms of improving the penetration of the insurance sector also into the country.
Sir, just on that point of insurance, there's been
and
a lot
also
of...
for the AMCs also, there's enough application for AI. Yeah.
Sir, there's also a lot of concern being raised by Finance Minister also on mis-selling and of a lot of financial products, including insurance, by banks, by NBFCs at large. The RBI has also come out with its draft guidelines there. What's your thought there, sir, right now?
No, I think very rightly so, because when it comes to banking is a business of trust, which I mentioned. And if at all there's a mis-selling, that actually shakes that trust. And very rightly so, those guidelines have been brought in. And I think the need of the hour is to ensure that there should be need assessment, a right need assessment. And after the need assessment, a right product should be sold. It should not be the wrong product. And though, apart from many other things, insurance has got one more loophole, which is actually 30 days look-up period. So, which means that anybody can change his mind in 30 days and can say that it was actually a mis-selling. That can also happen. That cannot be denied. So, having said all these things, I think very essential is to record the conversation. So, those are the kind of steps which have been suggested. And I'm happy to share that in some of the banks and some of the institutions, all those steps are already being taken. And now, of course, it is going to be ubiquitous across the financial sector. And I'm sure with the right selling, this will go a long way in terms of ensuring that the product should get the right penetration. And also it should improve from the 4% penetration which is there currently to significantly more. Global average is about 7%. It should move towards 7%.
Right. Zareen, when you look at the whole opportunity which artificial intelligence presents for the entire banking sector, obviously banks have to get ready for it and then before that spend money to make some more money. Where exactly do you see a lot of investments happening in the domestic banking sector when it comes to artificial intelligence?
I think if you see the banking sector, the financial risk is very, very muted now. I think it's the non-financial risk which really needs to be sort of focused on. If you look at the cyber attacks that happen in India, annually there are about 14 lakh cyber attacks that happen. And a lot of it is financial sector. So how do you use AI, in these kinds of areas where it builds up your operating resilience? That's also very, very important. So I see, how do you sort of look at your AML risk? How do you use AI in that to enhance your AML monitoring? The whole cyber attack resilience, the operating resilience. For example, today everybody is looking at the cloud for operating resilience, but I think AI can be used for many other areas of operating resilience. So I see investments happening there. Also on fraud detection, as Mr. Khara said, I think that's a very, very big area where we can see AI investments happening. And of course, improving the productivity. So, for example, if we look at global examples, Bank of America uses a bot which actually does 1 billion customer interactions. And if we see some global examples, JP Morgan Chase uses AI for fraud detection, and it does 12,000 contracts in seconds. And HSBCs use that AI ML for transaction monitoring to cut false positive by 60%. So I'm sure some of those areas are where Indian banks will also step up on the AI investments.
Rajneesh, I'll come to you next, and I want to ask you on the financializing of household savings at this point in time, and how are banks dealing with it? You have, of course, had to compete more with the capital markets, with the bond markets, to grab a market share. What do you think can the banks do at this point in time here?
Yeah, that's a very burning topic these days because CASA is declining for the banks, for all scheduled commercial banks, and there is a structural shift which is happening as far as the deposits is concerned, and it's rightly so. If you see the data over the period of time, the CASA percentage is coming down, and in the last 3-4 years it has come down even further. So as the economy is progressing, obviously we are a developing economy, and the economy is growing, and a lot of financial literacy is happening. And once the financial literacy happens across the country, so there will be a lot of thing wherein lot of investment opportunities will be coming to the customers, wherein they can invest in equity markets directly, mutual funds, they can invest in insurances, they can invest in pension funds, they can invest in even the gold, metals, and also the real estate. When this kind of opportunity is available rightly to the investors and the customers, definitely they will have some, there will be definitely some shift. If you see the data globally in the developing countries, there also the CASA percentage in the developing countries banks is somewhere around 20%. So still now that scheduled commercial banks CASA percentage around 37% is still very high. So as we develop further and we go towards the Viksit Bharat 2047, this percentage will definitely be coming down. So banks will have to see where to fund this credit growth from, because these retail term deposits and CASA will not be a thing which will last much. So it will be there, but the percentage will definitely come down. So maybe structurally we'll have to see, maybe banks will also have to raise bonds. Even the corporates and others, they will also have to go for the bond market to raise the funds, because this is something change, structural change which will happen in the economy and also in the banking system.
Right. Mr. Saxena, coming to you, with the advent of so much of digitization which public sector banks have utilized to their credit over the last 10-15 years or so, in the next 5, do you see branch networks sort of losing their meaning? Banks such as yours, banks such as Bank of India, deploying much more money into digitization of their services and reaching a wider audience electronically rather than physically?
I think to discuss and better understand this question, we'll have to go back to the COVID days. COVID taught us a couple of things, and it created that compulsion on us to keep the normal operations growing by using technology. And I think banks did leverage on technology. A lot of technology adoption has happened in the banks during the COVID time. And I think a lot of traction in terms of the top line and the bottom line has been contributed on account of technology. When we have seen business have been digitally sourced end to end, the business that is sourced digitally has also been a profitable business, because the cost of acquiring this new customer digitally has been on a very lower side. Having said that, what we have also experienced, that it has not gone totally going the digital way. Now we have been for lately 1.5 years talking about being phygital. So there is a strong realization that banking 100% minus the customer and the client and the banker interface doesn't happen. So having that realization, you would see lately many banks, and in fact we have been one of the banks which are aggressively expanding into new geographies and I have a robust board-approved plan of opening 1,000 branches in 5 years. And that's how we now look at even the private banks for the last, I would say, 1 to 2, 3 years. There is a data in front of us that maybe because of the CASA, the low-cost component of the deposits, they have been opening branches aggressively in the rural and semi-urban centers where typically the PSBs used to have some monopoly. So I would say the 100% technology taking over will not happen in India, at least for the time being. That's what I would say.
Thank you so much. A huge round of applause, ladies and gentlemen, for all our panelists for such wonderful insights that they've shared on the panel. May I request Shri Dinesh Bhatia to please come on stage, Group CEO India Today, to present a token of appreciation to all our panelists. Warm round of applause, ladies and gentlemen. Warm round of applause, ladies and gentlemen, once again for Shri Dinesh Kumar Khara, Rajneesh Karnatak, Nidhu Saxena, Zareen Daruwala. And now, ladies and gentlemen, we are going to be looking forward to a special keynote address. 6 years, multiple crises, one governor who held the system together when it mattered the most. The segment recognizes Shri Shaktikanta Das's role in stabilizing India's financial system through the banking stress, NBFC failures, the pandemic, the global inflation shocks, and unprecedented regulatory transitions, while preserving the institutional credibility, macroeconomic stability, as well as financial innovation at large. Ladies and gentlemen, may I please request everybody to put your hands together to welcome our special guest, Shri Shaktikanta Das, Principal Secretary to the Prime Minister of India, for the keynote address.
Good evening, everyone. It feels nice to be back in Mumbai and see so many known faces with whom I had worked for 6 years here, and have had the opportunity also of interacting on a continuous basis even now. So Shri Arun Puri, Shri Siddharth Zarabi, Ms. Kali Puri, organizers of this event, BTV, National Stock Exchange, which is hosting this event, and ladies and gentlemen and distinguished members of this gathering. It's a great honor to stand before this august audience at the Business Today Banking and Economy Summit hosted at the prestigious National Exchange building in Mumbai. The high editorial standards, expert analysis and impactful reports of Business Today have firmly established it as one of India's most trusted and authoritative voices in business journalism. In fact, over the years, the India Today Group has emerged as an institution that has transformed a single magazine into one of India's most diversified and influential media powerhouses. My congratulations to Sri Arun Puri and his team. The presence of leaders from banking, policy making, and industry in this event today is not just a celebration of excellence, but a reaffirmation of our shared responsibility to strengthen the foundations of growth, stability, and inclusion for India's future. We are living in an era of geopolitical shifts, more so given the events which are taking place since today morning. So this is an era of geopolitical shifts, rapid economic change, technological disruption, and evolving expectations. In this backdrop, I propose to speak on India's journey from being an incredible India to a credible India, an India that inspires trust and confidence. The global economy is currently navigating an unusually turbulent and uncertain phase, shaped by persistent geopolitical fragmentation, supply chain realignments, and uneven economic momentum across regions. The International Monetary Fund, that is the IMF, underscores this fragility, noting that risks to global growth outlook remain firmly tilted to the downside. Compounding this challenge is a possible tightening of financial conditions led by high public debt and widening fiscal deficits across several major economies. While global economic order is shifting under the weight of volatility, the Indian economy presents a picture of resilience and stability. This has happened not by chance. It is indeed the result of surgically precise interventions by the Government of India and I would also like to add the Reserve Bank of India. In the immediate aftermath of the COVID-19 pandemic, India undertook calibrated fiscal and monetary expansion which were rolled back in time and ensured that undesirable cholesterol was not built up in our economic and financial systems. This was something unique among countries. As a result, Indian economy has emerged much stronger after the pandemic. In fact, in the post-pandemic period, nearly 1/6 of global real GDP growth has come from India, thus establishing India firmly as one of the primary engines of global economic expansion. Today, India is not just reacting to the world, we are influencing its future direction and shape. The National Statistics Office, that is the NSO, places India's real GDP growth for 25-26, and as you would be aware, the data was released yesterday. The NSO places India's real GDP growth for 25-26 at 7.6%, reaffirming India's position as the fastest growing major economy in the world. At a personal level, I am delighted to note that the GDP growth for 24-25 is now estimated to be 7.1%. It was earlier estimated as 6.5%, but now it is estimated, according to the data released yesterday, at 7.1%. 24-25, as some of you would recall, was my last year in the Reserve Bank of India, and the latest GDP data not only aligns with the Reserve Bank's estimates at that time, but also dispels the narrative of gloom and doom in certain quarters about the impact of Reserve Bank's policies on the state of the economy during that year. This data also unequivocally demonstrates the success of Reserve Bank's monetary policy in containing inflation without compromising the growth momentum of the economy. In fact, India's average real GDP growth during the post-pandemic 5-year period, that is from 21-22 to 25-26, stands at an impressive 7.8%. Throughout my career, I have had the privilege of serving government in multiple capacities, a journey that has allowed me to closely witness India's extraordinary economic transformation. Seeing these shifts in policy, growth and national ambition unfold from such proximity has given me a ringside view of India's transformative journey. Drawing from this experience, I propose to reflect on 9 building blocks that define the Indian economy and foster its credibility. Building block 1 relates to structural reforms and institutional strength. Over the past decade, India has pursued a steady and credible reform agenda anchored in strong institutions and implementation of several structural reforms. This marks a pronounced shift towards a stable, institution-driven reform agenda that enhances global confidence and trust in our policy direction. Landmark reforms such as the implementation of the Goods and Services Tax, that is the GST, including the latest comprehensive reforms in GST which took place last year in the month of September, enactment of the Insolvency and Bankruptcy Code, that is the IBC, adoption of flexible inflation targeting, implementation of Real Estate Development Act, that is the RERA Act, measures to improve ease of doing business, strategic schemes for self-reliance, and several others have collectively reshaped the Indian economy. What is even more important is that India is avoiding reform complacency by steadily advancing its next generation reforms. In a landmark measure in November 2025, that is last November, the government has operationalized the 4 labor codes to support a future-ready workforce and a more competitive business environment. As you would recall, the labor codes were enacted in 2020, but it was notified for implementation in November last. So the second building block which I am referring to, I am talking about 9 building blocks, as I said. And the first building block, as I said, relates to structural reforms. The second building block relates to fiscal prudence and capital expenditure push, that is CapEx push. At a time when public debt remains elevated and fiscal space under strain in many countries, India's fiscal trajectory stands out for combining consolidation with sustained public investment. India has moved steadily along its fiscal glide path, reducing the deficit from the pandemic peak of 9.2% of GDP in 2021 to 4.4% in 25-26 and is budgeted to be 4.3% in the financial year 26-27. This is precisely because the kind of surgical, the directed interventions which were undertaken both by the government in the fiscal front and the Reserve Bank of India in the monetary front. Central government debt to GDP is targeted to reduce from 56.1% in 25-26 to 50% plus minus 1 by 2031. In a world where many nations are struggling with inflationary pressures and widening fiscal gaps, India's approach stands out as a model of prudence and stability. A key marker of this fiscal stability is the improved quality of expenditure. The share of central government capex, that is capital expenditure, in its total spending has risen from about 12.3% in 2017-18. I repeat, the share of capital expenditure in the total spending of the central government has risen from 12.3% in 2017-18 to 22.1% in 25-26 and is budgeted to increase further to 22.8% in 26-27, strengthening the productive capacity of the economy. One of the most powerful drivers of India's growth story is its unprecedented investment in infrastructure. The country's capital expenditure has seen fourfold increase since 2017-18, rising to 11 lakh crore in 25-26 and is budgeted at 12.2 lakh crore rupees in 26-27. The effective capital expenditure, that is capital expenditure including the grants in aid to states for capital expenditure, is expected to touch 17.1 lakh crore in 26-27. These investments are not concentrated merely in mega cities, but they span highways, ports, airports, digital infrastructure, logistics networks, and urban renewal projects across the nation. These systemic interventions are reducing logistics costs, improving connectivity, and opening up opportunities beyond traditional urban clusters. Today, India is not just building infrastructure, it is building the scaffolding of a modern economy that can sustain high growth for decades. The third building block of the Indian economy, where it stands today, it relates to resurgence in manufacturing. Over the last decade, several policy measures were undertaken to shift the India story from a services-only narrative to a manufacturing resurgence. Anchored by the Make in India initiative, the country has witnessed a sustained surge in industrial output. Strategic interventions like the production-linked incentive schemes have reinforced this momentum. The manufacturing revival is especially pronounced in technology-intensive sectors. Electronics manufacturing has grown more than five-fold over the last decade, with record mobile phone production making India the second largest mobile phone manufacturer in the world. Ambitious semiconductor initiatives under this rupees 76,000 crore India semiconductor mission are building end-to-end capability. India's pharmaceutical sector continues to dominate globally, ranking third by volume and being the biggest supplier of low-cost vaccines in the world. The automotive industry has regained strong traction post-pandemic with rising production and expanding exports and a clear movement up the global value chain. Even India's defense manufacturing has witnessed a dramatic transformation with rapid surge in exports over the past decade. The fourth building block I would like to refer to is services sector resilience and moving up the global value chain. India's services sector is a major driver of exports and employment in the country. Services sector FDI inflows accounted for 80% of total FDI flows during 22-23 to 24-25. From being described as world's back office, from being described as world's back office, India is now transitioning into value-added services and innovation. Nearly 1,800 global capability centers, that is GCCs, have come up contributing about $68 billion to the economy and employing over 2 million professionals. GCCs in India have become strategic hubs where teams design global production, lead R&D, and manage entire intellectual property portfolios. Further, India's artificial intelligence, that is AI strategy, is taking clear shape, powered by rupees 10,300 crore India AI mission. The initiative focuses on building sovereign AI capacity through development of indigenous large language models, LLMs, across 22 Indian languages. At the same time, India is taking a smart and practical approach by focusing on small language models also, that is SLMs, which are cheaper to run, easier to train for Indian languages, and can work even on smartphones. Most importantly, India is building AI that solves real problems for citizens, from healthcare to agriculture, creating a model of AI for public good. The recently held AI Impact Summit 2026 in New Delhi will position India as a global leader in this direction. The building block 5, which I would like to refer to, relates to external sector and trade integration. India has entered 2026 with a remarkably resilient balance of payments, supported by strong services exports, rising remittances, and steady capital flows. Despite global volatility, India's services sector, led by IT and business services, continues to generate robust net receipts. Remittances remain another backbone of external stability, reaching US $135.4 billion in 24-25. Diversified exports, healthy inward transfers, and moderate external debt have collectively enabled India to navigate capital flow swings. Amid global supply chain disruptions, rising tariffs, and geopolitical fragmentation, India has pursued an assertive strategy of trade diversification, anchored in free trade agreements and interim trade pacts. At a time when global trade weakened in 2025, India expanded its external engagement rather than retreating behind the veil of protectionism. The government fast-tracked and concluded several major FTAs with UK, Oman, New Zealand, the European Union, and the USA. What is remarkable in these trade agreements is, as the Prime Minister has recently described, a paradigm shift in India's trade policy. India is now negotiating trade agreements with major advanced economies from a position of strength and confidence. Illustratively, the India-EU Free Trade Agreement is a landmark next-generation partnership which unlocks unprecedented market access and places India in the central circle of global trade. The India-US trade agreement represents another major breakthrough, sharply reducing the US tariff on Indian goods. The new trade agreements, together with India's broader diversification strategy into new markets and new products, reinforce India's position as a key driver of global economic growth. Building block 6 relates to strong balance sheets of banks, corporates, and households. For over a decade, India had grappled with the twin balance sheet problem of stressed banks and over-leveraged corporates. This made the financial system highly vulnerable to external shocks, and India's banking and financial sector, however, have since staged a complete turnaround. We are now witnessing a rapid transformation fueled by the so-called triple threat of progress, innovation, disruption, and the birth of entirely new business models. Let me repeat. We are now witnessing a rapid transformation fueled by the so-called triple threat of progress, innovation, disruption, and the birth of entirely new business models. The democratization of credit, the revolution of digital payments, and the rise of Fintech have turned what was once a rigid sector into a fluid and dynamic engine of growth. We are no longer just providing services, we are building the infrastructure of aspiration for 1.4 billion people. Similarly, after a multi-year deleveraging cycle, Indian corporates now stand on much stronger financial footing. Balance sheets have been significantly cleaned up with reduced leverage, stronger profitability, and markedly improved interest coverage ratios. This renewed financial strength has enabled large firms to weather the global disruptions while positioning themselves for the next phase of investment and expansion. In fact, there are already visible signs of pickup in private investment cycle. Indian households' balance sheets also remain equally resilient, with household debt levels being far lower than those of major emerging economies. Further, increase in household borrowings being led by better customers, prime and above. Further, increase in households borrowings is being led by better rated customers who are prime and above. Households also remain net financial asset holders, supported by a surge in equity participation. Retail investors have become a powerful pool of stable domestic capital, symbolizing a cultural and structural shift towards long-term wealth creation. The building block 7 relates to digital public infrastructure, that is the India stack. The infrastructure of 20th century India was defined by physical infrastructure. The 21st century infrastructure would be defined by digital public infrastructure, that is DPI, which is the India stack. This stack has become the global gold standard for how a nation can use technology to empower citizens. The Unified Payments Interface, that is UPI, now processes over 20 billion transactions per month, accounting for nearly half of all global real-time digital payments. The digital-first approach has moved beyond simple payments to transformative governance through direct benefit transfer, that is DBT. DigiLocker has now more than 65 crore users, underscoring seamless access of digital records across sectors. With the world's cheapest data rates and over 950 million internet users, the focus has now expanded to Open Network for Digital Commerce, that is ONDC, and the Account Aggregator Framework, which are democratizing e-commerce and credit for millions of small businesses. We are now witnessing birth of what may be called the digital stack or the India Stack 2.0, the next generation of India's digital public infrastructure. This would be a more nuanced, intelligent, AI-driven and globally scalable evolution. Leveraging over 57 crore Jan Dhan accounts, we are moving towards a frictionless financial future. Imagine a world where a voice-based conversational AI allows a farmer in a remote village or a street vendor in a tier 3 town to authorize transactions without needing a smartphone or high-speed internet. This is the democratization of opportunity. The building block 8 relates to demographics, human capital and jobs. While the developed world grapples with an aging crisis, India is entering its prime. With over 68% of population in the working age group and a median age of around 29 years, India possesses one of the youngest labor forces globally. To harness this potential, initiatives such as the Skill India Mission and the Pradhan Mantri Kaushal Vikas Yojana were launched to improve employability. Measures are being taken to connect job seekers with employers and to remove practical barriers of entering the workforce. The e-Shram portal has been launched to register unorganized workers. Women-centric livelihoods are being strengthened through the Din Dayal Antyodaya Yojana. Together, these initiatives reflect a shift from welfare-led employment to productivity-driven job creation. And this is a big transformation. This is aimed at making India's workforce larger, more skilled, and more formally integrated into the economy. The 9th building block, which is the last and final building block that I would like to highlight, relates to energy transition and green growth. India's energy transition has reached a point where ambition is no longer the headline. Execution is. In June 2025, India achieved a landmark in its energy transition journey by reaching 50% of its installed electricity capacity from non-fossil fuel sources, more than 5 years ahead of the 2030 goal set by the Paris Agreement. As of end 2025, the country's renewable energy capacity reached 258 gigawatt, more than tripling over the past decade, a reflection of sustained investment and policy support in solar, wind, and other non-fossil fuel assets. The country has simultaneously driven down power shortages to nearly zero. It's actually 0.1%, even as demand has surged. A proof that clean energy is not just keeping up with India's growth, but in fact powering it. Under the National Green Hydrogen Mission, the country aims to produce 5 million metric tons of green hydrogen annually by 2030. The scope for harnessing expanded nuclear energy has been enabled by opening the doors for the private sector. India's energy transition is therefore no longer a climate story alone. It is a story of economic self-assertion, industrial competitiveness and strategic resilience in a world where energy has become the new currency of power. Let me now make some concluding observations. Driven by the 9 solid building blocks which I have explained earlier, India is mapping a future that is already arriving. Today, we are not here to merely recount history. The world is coming to us because India is one of the largest and most exciting markets. With our demographic strength, technological momentum, startup and AI ecosystem, stable macroeconomic framework, and rising competitiveness, India is poised to define the economic narrative of the 21st century. There are several other building blocks like agriculture, tourism, healthcare, and a few others which are also witnessing rapid strides. But I have not touched upon them in the interest of time. As we look ahead, one point stands very clear. India's growth story has become credible, and the coming decade will not be one where India simply participates in global growth, but one where India shapes it. A developed India, that is Vikshit Bharat, is not just a destination on a calendar. It is a commitment we make today for our future generation. It requires us to be bold in our disruption and uncompromising in our pursuit of stability. We have to run a marathon and a sprint simultaneously, maintaining macroeconomic and financial sector stability while aggressively expanding the new frontiers of growth. I'll stop here. Thank you very much. Namaskar.
Thank you so much, sir. May I please request you to stay back on the stage? I will also request Sri Arun Puri, Chairman of India Today, to please come up on stage and felicitate our special guest as well. Thank you so much, sir, for your inspiring words. Let's move to the center of the stage, sir. May we have the token of appreciation? So please hold on. May I also request Shri Ashishkumar Chauhan to come up onto the stage and felicitate you as well. We have a bull with the family and the bell sign as well of the NSE to be presented to you. Round of applause, ladies and gentlemen, for Shri Shaktikanta Das. Thank you so much, sir. Thank you so much, Arun sir, and thank you so much, Ashish sir. Ladies and gentlemen, we move forward to our final session for the evening. This one is banking on infrastructure growth. Please join me in welcoming our special guest of honor, Union Minister for Road Transport and Highways, Shri Nitin Gadkari ji, on stage, please. I'd also like to invite on stage Mr. Siddharth Jarabi to moderate the session, Banking on Infrastructure Growth.
नमस्कार, गडकरी जी, आपका पुनः एक बारी स्वागत इस कार्यक्रम में। आप यहाँ आए अपनी व्यस्तता के बावजूद भी नवी मुंबई से कार्यक्रम से चल के, आपका बहुत बहुत धन्यवाद। इस सभागार में नेशनल स्टॉक एक्सचेंज के भारत के ऐसे बड़े बड़े बैंक और जिन्होंने बहुत अच्छी परफॉर्मेंस की है, NBFCs, ऐसे लगभग 1.5 दर्जन से ज्यादा CEOs हैं जो आपके विचार सुनना चाहेंगे। समय को ध्यान में रखते हुए, क्योंकि आपको फ्लाइट भी लेनी है, इसलिए 4-5 एक बड़े प्रश्न जो मुझे लगता है आज रेलेवेंट है। सबसे बड़ा प्रश्न कि आने वाले समय में गडकरी जी, इंफ्रास्ट्रक्चर को लेके जो मोदी सरकार में पिछले 11 साल से काम हुआ है, इसमें किस प्रकार की बढ़ोतरी और होने की संभावना है और किस टाइप का इंफ्रास्ट्रक्चर अब सरकार द्वारा पूरे भारत में बनाया जाएगा?
सबसे पहले मैं आपको बताऊंगा कि अच्छा इंफ्रास्ट्रक्चर देश के विकास के लिए बहुत महत्वपूर्ण है। वाटर, पावर, ट्रांसपोर्ट एंड कम्युनिकेशन। अच्छे इंफ्रास्ट्रक्चर के बिना कैपिटल इन्वेस्टमेंट और इंडस्ट्री नहीं बढ़ सकती, और इंडस्ट्री और कैपिटल इन्वेस्टमेंट आए बिना एम्प्लॉयमेंट पोटेंशियल नहीं बढ़ सकता, और एम्प्लॉयमेंट पोटेंशियल अगर नहीं बढ़ेगा तो गरीबी दूर नहीं हो सकती। तो हमारी सरकार जब 2014 में आई तो प्रधानमंत्री जी ने हाईएस्ट प्रायोरिटी इंफ्रास्ट्रक्चर डेवलपमेंट के लिए दी, और आज मुझे खुशी है कि हमारी रोड इंफ्रास्ट्रक्चर में जो जिम्मेदारी मेरे पास है उसमें काफ़ी बदलाव हुआ है। और विशेष रूप से अभी IIM बेंगलोर, IIT कानपुर और IIT चेन्नई ने एक अध्ययन किया है, और उसमें उन्होंने ये इंडिकेट किया है कि हमारे जो लॉजिस्टिक कॉस्ट है, जो GDP के 14 से 16% थी, जो यूरोपियन कंट्री में 12% थी और चाइना में 8% है, तो हमारी लॉजिस्टिक कॉस्ट 6% कम हुई है, 5 से 6%। तो आज मैं यहाँ बैठकर ये जरूर विश्वास के साथ बता सकता हूँ कि अब सिंगल डिजिट में हमारी लॉजिस्टिक कॉस्ट आई है। इसका कारण एक्सप्रेस हाईवे बन गए कुछ। इस दिसंबर तक दिल्ली से मुंबई हाईवे पूरा होगा जी। देहरादून से दिल्ली पूरा हुआ है, जो 2 घंटे में आप जा सकोगे, जो 8 घंटे लगते थे। चेन्नई से बेंगलोर दिसंबर तक पूरा हो जाएगा, 2 घंटे में चेन्नई से बेंगलोर हो जाएगा। ऐसे हम 40 हाईवे बना रहे हैं एक्सिस कंट्रोल में। और दूसरी इंपॉर्टेंट चीज है कि हमने फ्यूल में भी चेंज किया है। अभी हमारे काफी इलेक्ट्रिक के ट्रक आ रहे हैं। मैं आपको एक इंटरेस्टिंग बात बताऊंगा कि मैं शिपिंग मिनिस्टर था तो ये मुंबई में बख्शियन कंपनी करके लॉजिस्टिक कंपनी है, उनका अभी एक प्रोजेक्ट मैंने लॉन्च किया सोनीपत में जी। और वो जो इलेक्ट्रिक ट्रक है वो स्वैपिंग टेक्नोलॉजी में है, जो बैटरी को स्वैप करते हैं। और अभी JNPT, कांडला और मुद्रा पोर्ट की कंटेनर डायरेक्ट सोनीपत इलेक्ट्रिक ट्रक से जा रहे हैं। तो जो डीजल का खर्चा 110 रुपए पर लीटर है, जो जितना लगता है, वो कॉस्ट आई 18 से 20 रुपए। तो सभी इलेक्ट्रिक ट्रक भी आ गए हैं, और अभी हमने 6-10 मार्ग पर एक पायलट प्रोजेक्ट भी हम शुरू कर रहे हैं जो हाइड्रोजन फ्यूल पर है, जिसमें टाटा, लेलैंड, वोल्वो, IPCL, SPCL, IOCL, NTPC, और ये सब हाइड्रोजन पर अभी जो ट्रक आएंगे। वैसे टाटा के अभी 3 ट्रक मैंने 4 महीने पहले लॉन्च किए, जो 2 थे IC इंजन विथ हाइड्रोजन और एक था हाइड्रोजन फ्यूल सेल पर। तो मुझे लगता है कि हाइड्रोजन इज ए फ्यूल फॉर फ्यूचर, और आज हम एनर्जी को इंपोर्ट करने वाला देश है। और मैं ट्रांसपोर्ट मिनिस्टर करके कॉन्फिडेंट हूँ कि 5-6 साल में अंदर हम एनर्जी को निर्यात करने वाला देश बनेंगे। और ये बहुत बड़ा ये, क्योंकि जैसे अभी शक्तिकांत दास जी ने बताया कि अब सोलर पावर में कितना एडिशन हुआ जी। वैसे 22 लाख करोड़ रुपए का इंपोर्ट जो फॉसिल फ्यूल का है, वो अल्टरनेटिव और बायो फ्यूल में आएगा, जिसमें इथेनॉल, मेथेनॉल, बायोडीजल, LNG, इलेक्ट्रिक और हाइड्रोजन, चारों पर हम काम कर रहे हैं। तो मुझे लगता है कि लॉजिस्टिक कॉस्ट कम आएगी। अब रोड में बहुत अच्छा काम हो रहा है। हमारा बजट 3,20,000 करोड़ का है, और मैं आपके यहाँ बोलना मेरा उचित नहीं होगा, पर हमारे पास पैसे की कोई कमी नहीं है। हम किसी के ऊपर डिपेंड नहीं है। अभी आज मैं अगर मेरे प्रोजेक्ट मोनेटाइज करूं तो मुझे 8 दिन में 15 लाख करोड़ मिल जाएंगे। 15 लाख करोड़ 8 दिन में। हाँ, अभी इनविट मॉडल में हमने मुंबई स्टॉक एक्सचेंज में जब लॉन्च किया था जी, तो 7 दिन का टाइम था और मुझे टूर पर था मैं, पर पहले दिन 7 घंटे में 7 टाइम्स ओवर सब्सक्राइब हुआ। तो अभी हाइब्रिड अभी हमने 60,000 करोड़ के प्रोजेक्ट बीओटी में टेंडर कर दिए हैं, और अभी इन्विट मॉडल में भी हमें टीओटी में भी बड़े प्रोजेक्ट दे दिए हैं, हाइब्रिड एन्युटी में है, हमने मॉडल एग्रीमेंट को बदल दिया है। अब ना हमको इन्वेस्टमेंट की जरूरत है और बजट भी इतना, खर्चा कैसे करना ये हमारे लिए समस्या है, और हमने ऑब्स्टेकल्स भी निकाल दिए हैं। अब 90% लैंड एक्विजिशन किए बिना हम अपॉइंटमेंट देते नहीं। इन्वायरमेंट फॉरेस्ट क्लियरेंस पूरा, क्योंकि पुराना बैंकों का अनुभव ठीक नहीं था जी। पर मैं जब मंत्री बना 2014 में, तो 406 प्रोजेक्ट 3,85,000 करोड़ के बंद पड़े थे, एनपीए हुए थे, और उस समय हमने 40,000 करोड़ के प्रोजेक्ट टर्मिनेट किए, और लगभग 3 लाख करोड़ से हमने इंडियन बैंकर को एनपीए से बचाया, वो प्रोजेक्ट वे आउट निकाल दिए और वो प्रोजेक्ट चलने लगे। तो अभी तो कोई प्रॉब्लम नहीं प्रोजेक्ट स्टकअप होने का, क्योंकि लैंड एक्विजिशन, यूटिलिटी शिफ्टिंग, एनवायरमेंट क्लियरेंस सब एडवांस में ही कर रहे हैं। और अभी 60,000 करोड़ के हमने बीओटी में टेंडर किए, एक 6 महीने के अंदर और 2-2.5 लाख करोड़ के प्रोजेक्ट आएंगे, कैबिनेट के लिए गए हैं। तो मुझे लगता है कि अब रोड इंफ्रास्ट्रक्चर में तो कोई प्रॉब्लम नहीं है, और फ्यूल और रोड दोनों के चेंज होने के कारण लॉजिस्टिक कॉस्ट कम होगी, एक्सपोर्ट बढ़ेगा, इंडस्ट्री और ट्रेड बिजनेस को फायदा होगा, और नेचुरली इकोनॉमिक ग्रोथ होगी।
और जो आपने इंफ्रास्ट्रक्चर में इतना बदलाव हुआ, खासकर रोड इंफ्रास्ट्रक्चर में, अभी पीछे आरटीआई के द्वारा एक प्रश्न का उत्तर में ये पता लगा कि कई छोटे एयरपोर्ट शायद उतना चल नहीं पा रहे हैं, और उसका अगर एक प्रकार से हम श्रेय देंगे तो वो हाईवेज और एक्सप्रेस वेज को देंगे, क्योंकि एयरपोर्ट क्यों जाए, 2 घंटे में दिल्ली देहरादून हो रहा है, और उसके कारण कई एयरपोर्ट्स में शायद।
एक आपको बात बता दूं जी, मैं 95 में मुंबई में मिनिस्टर था
जी,
तब ये 55 फ्लाईओवर, वर्ली बांद्रा, मुंबई पुणे एक्सप्रेस हाईवे ये बनाने का मुझे सौभाग्य मिला। तब तो हमारे पास पैसे भी नहीं थे, 5 करोड़ रुपए थे। धीरू भाई मुझे कहते थे, अंबानी जी तुम कहाँ से कर पाओगे, और हमने उस समय कैपिटल मार्केट से 600 करोड़ का बॉन्ड इशू निकाला था, 1200 करोड़ मिले थे, और ये पूरे प्रोजेक्ट उस समय किए जबकि हमारी बैलेंस शीट उस समय कुछ नहीं थी। अब तो हम AAA रेटिंग है सर। अब हम बैंक के पास जाने के बजाय, अच्छे मूड में बोल रहा हूँ, अब बैंक वाले हमारे पास आ रहे हैं कि आप अच्छे प्रोजेक्ट बताओ, हम फाइनेंस करेंगे। हम तो मॉनिटाइज करना चाहते हैं, और मैंने आगे कुछ बैंकों को ये कहा कि ट्राई पार्टी एग्रीमेंट खोलेंगे जी, रोज टोल आपके अकाउंट में जमा होगा, और पहले आपका पैसा निकाल लीजिए, बाकी बाद में। तो इनको इतना 100% सिक्योर्ड कहाँ मिला है?
तो बैंकों को आप क्या कहेंगे, क्योंकि कुछ समय पहले, 1 दशक पहले बैंक घबराते थे एनपीए से, बहुत बड़े बड़े प्रोजेक्ट्स, आपने जिस क्षेत्र की बात की और अन्य क्षेत्रों में भी बहुत बड़े बड़े एनपीए हुए। आज बैंक्स को 2026 में, आज जब बात हो रही है, अपने देश के इंफ्रास्ट्रक्चर डेवलपमेंट के लिए किस प्रकार का सहयोग करना चाहिए?
देखिए, पहली बात तो ऐसी है कि हमारी ऑटोमोबाइल इंडस्ट्री तेजी से बढ़ रही है, अनायासे वो भी मेरे तरफ डिपार्टमेंट में है। मैं जब मंत्री बना तो 7वें नंबर पे थी, आज हम लोग 3रे नंबर पर आए। हमने जापान को पीछे डालकर अब 3rd नंबर पर आए। अमेरिका पहले नंबर पर है 79 लाख करोड़, चाइना 2nd नंबर है 48 लाख करोड़, और हम 22 लाख करोड़ है। और अब ऐसी स्थिति, अभी मैंने इलेक्ट्रिक मर्सिडीज लॉन्च की, तो मुझे जो वर्ल्ड चेयरमैन थे उन्होंने कहा झारखंड में कि अब पूरी इलेक्ट्रिक करेंगे और इंडिया में बनाएंगे। अभी हमारी 2 व्हीलर जो है 50% उसके एक्सपोर्ट है, बजाज, टीवीएस, हीरो होंडा, 50% प्रोडक्शन एक्सपोर्ट है। तो हमारा 22% ग्रोथ है। अभी जो जीएसटी कम हुआ, इसके कारण ऑटोमोबाइल में 30% ग्रोथ है। हिंदुस्तान में 2 बातों पर पक्का विश्वास रखिए, पॉपुलेशन बढ़ाना और ऑटोमोबाइल नंबर बढ़ाना, इसको कोई रोक नहीं सकता। तो इसके लिए IRR अच्छा है, इंटरनल रेट ऑफ रिटर्न इज वेरी गुड, और इसलिए जितने हाईवे हम बना रहे हैं उसमें टोल के हिसाब से अभी हमने उसको और सिंप्लीफाई किया है। 3,000 रुपए में 200 टोल, तो कार वालों को भी काफी राहत मिली है। तो एक तो प्रोजेक्ट इकोनॉमिकली वायबल है, इंटरनल रेट ऑफ रिटर्न अच्छा है। जो पुराने समय प्रॉब्लम आए थे उसमें लैंड एक्विजिशन 10% थी और अवार्ड हो गए थे, अब हम 90% के बिना देते ही नहीं। इन्वायरमेंट फॉरेस्ट क्लियरेंस पूरा ले लेते हैं। अभी हम मुंबई पूना में मैं अगले 15 दिन में 50,000 करोड़ के 5 प्रोजेक्ट लॉन्च कर रहा हूँ बीओटी पर, और एक ही पिलर पर 4 लेयर ब्रिजेस है। तो ये एकदम वायबल है क्योंकि 1.5 लाख पीसीयूज वहाँ है। तो मैं आपको कहूँगा कि अभी कोई प्रॉब्लम नहीं है। बीओटी में जो कॉन्ट्रैक्टर काम करेंगे उसमें हमने नया मॉडल एग्रीमेंट बनाया, रिस्क भी निकाल दी है। जैसे 10% से ज्यादा टोल होगा तो हम लोग उसको दोनों मिलके बांटेंगे, कम होगा तो हम कॉम्पेंसेट करेंगे, तो रिस्क भी नहीं है। और दूसरी इंपॉर्टेंट चीज ये है कि अब फास्ट ट्रैक के कारण ये बैरियर्स हम निकाल देंगे। इस साल दिसंबर तक आप 80 किलोमीटर के स्पीड से निकल जाओगे, कोई आपको रोकेगा नहीं। और अभी आज हमने निर्णय किया, हमें हमारे ये इसमें बैंक और टेक्नोलॉजी प्रोवाइडर का जॉइंट वेंचर था। अभी मैंने कहा कि एनबीएफसी को भी अलाउ करेंगे और शेड्यूल बैंक को भी अलाउ करेंगे, कोऑपरेटिव को, ताकि अब टोल भी कलेक्ट करने का काम बैंक वाले कर रहे हैं। और ऑलरेडी हमारे जहां 15% हमारा टोल परसेंट का खर्चा था, अभी पहले जो 8-10 प्रोजेक्ट गए उसमें हमारा खर्चा आया 4.5% जी। तो हम 55,000 करोड़ के टोल में 10% 5,500 करोड़ तो वैसे ही बचे हैं। तो अब आने वाले समय में टेक्नोलॉजी का उपयोग करके और ट्रांसपेरेंसी के साथ जो कर रहे हैं, अभी मुझे लगता है कि यह सेक्टर में फाइनेंस करने में कोई अड़चन नहीं।
मंत्री जी, टेक्नोलॉजी का प्रयोग और जिस प्रकार से आप फास्टैग की बात कर रहे हैं उससे बहुत बड़ी सुविधा होगी, पर शायद जनता में लोग ये भी पूछेंगे कि अगर ये सुविधा हो रही है तो क्या टोल की जो दरें हैं, ये सवाल आपसे भी आता है, ये टोल की दरें कम होने की कोई संभावना है क्या?
पूरी हो गई। अभी तो 3,000 रुपए का आपने पास लिया तो 200 टोल फ्री ऑफ चार्ज है, 15 रुपए में टोल। अभी तो कार वालों में तो कोई तकरार ही नहीं रही। अब बस वाले और ट्रक वाले मांग कर रहे हैं, तो अभी कोई कार में तो प्रॉब्लम ही नहीं है कोई।
अब हाईवे और एक्सप्रेसवे निर्माण की जो गति आपने कई कीर्तिमान उसमें पार किए, आने वाले समय में किस प्रकार की गति रहेगी हमारे राष्ट्रीय राजमार्ग और इस सारे सेक्टर में?
सर, गति में ऐसा है कि ना पैसे की कमी है, टेक्नोलॉजी का अपग्रेडेशन लगातार हो रहा है। अभी हमने प्रीकास्ट को मैंडेटरी कर दिया है। अभी हम बायो बिटुमिन का राइस स्ट्रॉ से बायो बिटुमिन का 1 किलोमीटर रोड बना है। अभी हमने दिल्ली में और अहमदाबाद में 80 लाख टन म्यूनिसिपल वेस्ट सेग्रीगेट करके रोड में डाली है। तो अभी टेक्नोलॉजी भी उपयोग कर रहे हैं और अभी उसमें कोई प्रॉब्लम नहीं है। प्रॉब्लम एक ही है कि अब प्रोजेक्ट जो हमारी सिस्टम में हमको प्रोजेक्ट मंजूर करना पड़ता है, उसमें हमारा काफी समय जाता है, क्योंकि भारतमाला में हमको 3,000 करोड़ की अनुमति थी। अब भारतमाला अभी नहीं है, तो अब हमको 1,000 करोड़ की हुई, उसमें 18% जीएसटी लगता है। तो अभी हमें टोटल प्रोजेक्ट को, हमारे प्रोजेक्ट 5,000, 6,000, 7,000, 3,000 ऐसे ही है। तो अब ये प्रोजेक्ट को निकालकर मिनिस्ट्री में, फिर फाइनेंस मिनिस्ट्री में, फिर कैबिनेट तक ले जाना, तो इसमें थोड़ा सा समय लगता है। उसको भी हम फास्ट करने की कोशिश कर रहे हैं। तो अभी वैसे तो कोई समस्या नहीं, पर अब हमारी कॉन्ट्रैक्टर की टेक्निकल एबिलिटी और हमारा फाइनेंशियल रिसोर्सेस, इसको करते हुए हमें कोई प्रॉब्लम नहीं। हम 10-1 लाख करोड़ के प्रोजेक्ट कर सकते हैं।
अगर 10-1 लाख करोड़ के प्रोजेक्ट आ रहे हैं, तो आने वाले समय में किन क्षेत्रों में, भारत देश में किन क्षेत्रों में हम ज्यादा निर्माण की गति देख पाएंगे?
देखिए, हम केवल नॉर्थ ईस्ट में 5 लाख करोड़ के रोड बना रहे हैं। अभी हम ब्रह्मपुत्रा के नीचे रोड और रेलवे 19,000 करोड़ के टनल बना रहे हैं। वो काजीरंगा में हम लोग 8,000 करोड़ का एलिवेटेड रोड बना रहे हैं। हम 17,000 करोड़ का रिंग रोड गुवाहाटी का बना रहे हैं। तो अभी नॉर्थ ईस्ट में भी कम से कम 5 लाख करोड़ का हम काम कर रहे हैं। वैसे बाकी महाराष्ट्र, कर्नाटक, आंध्र, पंजाब, गुजरात, यहाँ तो ट्रैफिक ग्रोथ ज्यादा है, वहाँ ट्रैफिक डेंसिटी ज्यादा है, तो वहाँ भी कोई प्रॉब्लम नहीं है। अभी तो काफी एक्सप्रेस हाईवे हम बना रहे हैं। अभी दिल्ली से चेन्नई ये डिस्टेंस हम 320 किलोमीटर कम करेंगे। यानी दिल्ली मुंबई हाईवे से सूरत तक आने के बाद सूरत से नासिक, नासिक से अहमदनगर, अहमदनगर से सोलापुर, सोलापुर से कर्नूल और कर्नूल से कन्याकुमारी, त्रिवेंद्रम, कोचीन, हैदराबाद, चेन्नई, पूरे साउथ को जोड़ देंगे। तो अब मुंबई और पुणे और सोलापुर और कोल्हापुर जाने की जरूरत ही नहीं है।
अभी मैं आज ही नई मुंबई से आया है। अभी हम नया एक मैंने मुंबई पुणे एक्सप्रेस हाईवे बनाया था 95-2000 में
जी।
अभी मैं नया रोड बना रहा हूँ। आज अटल ब्रिज के 4 किलोमीटर दूरी पर पहला पैकेज अभी बीओटी में निकल रहा है और वहां से हम लोग पुणे के रिंग रोड को जाएंगे। और ये रोड अभी मैंने कहा है कि ये कम से कम 40 लेन की हम लैंड एक्वायर करेंगे, क्योंकि मुंबई पुणे में मैंने गलती की, थोड़ी कम हुई थी। और उसको पुणे रिंग रोड से डायरेक्ट बेंगलोर, तो मुंबई से बेंगलोर 5.5 घंटे में हो जाएगा।
जी जी।
और ये बात आपके जरूर है कि मैं जब मुंबई पुणे हाईवे बना तो जेट एयरवेज की मुंबई से पुणे के बीच में 8 फ्लाइट थी, पूरी बंद हो गई। अब मुंबई पुणे कोई फ्लाइट से जाता नहीं। अब मैं आपको लिख कर देता हूं कि दिसंबर में दिल्ली से देहरादून फ्लाइट बंद हो जाएगी, फिर दिल्ली से जयपुर बंद हो जाएगी, पर इसका मतलब कोई उनका नुकसान नहीं होगा, वहां से और जगह फ्लाइट जाएगी।
मंत्री जी, आप दिल्ली में समय देते हैं, नागपुर आपको आज जाना है, हम सब कई लोग दिल्ली से आए हैं, सो दिल्ली से जुड़ा हुआ एक सवाल। एक कमेटी ने ये सुझाव दिया है, झुनझुनवाला कमेटी ने, कि शायद 2040 तक दिल्ली में जो ये सारी आइस पेट्रोल डीजल वाली गाड़ियां हैं इनको बंद कर दिया जाएगा। क्या ये संभावना है और क्या ये मॉडल देश भर में बाकी जगह मेट्रोज में लगने की कोई संभावना कि आप आइस व्हीकल खरीद ही नहीं पाएंगे, चला नहीं पाएंगे बड़ी मेट्रो में?
देखिए, हम एक डेमोक्रेटिक कंट्री है। अभी ट्रैक्टर वालों को मैंने बुलाया था और उनको डिजिटल ट्रैक्टर करने के लिए मुदत खत्म हो रही थी 2 महीने में। सबने मुझे कहा कि हमें मुदत 2 साल की बढ़ा दो। मैंने बोला मैंने आपको 3 बार बढ़ाया, अब बढ़ाता नहीं, पर मेरी कंडीशन है।
जी।
बोले क्या? बोला 1 साल के अंदर इलेक्ट्रिक ट्रैक्टर और फ्लेक्स इंजन का ट्रैक्टर लॉन्च करो। अभी मैं खुद खरीद रहा हूं पहला ट्रैक्टर सीएनजी और इथेनॉल पर, तो मेरे 1 लाख रुपए किसान के बच जाएंगे, क्योंकि डीजल 110 रुपए और इथेनॉल 60 रुपए 65 रुपए, और सीएनजी का माइलेज भी ज्यादा है। तो अभी क्या है कि कोई चीज जबरदस्ती करके इस प्रकार से नहीं होगी। कुछ लोगों ने बैंकों से लोन भी लिया है, पर मैं आपको दूसरी बात बताता हूं। अरुण पुरी जी बैठे यहां, मैं जब शुरुआत में पहली इलेक्ट्रिक बस और इलेक्ट्रिक कार को मैंने लॉन्च किया था, तो मुझे आपके ही कार्यक्रम में एक पत्रकार ने प्रश्न पूछा था कि अगर ये इलेक्ट्रिक की गाड़ी रोड पे बंद होगी तो धक्का मारने के लिए आप आओगे क्या?
मैं नहीं था।
तुम नहीं थे। तो मैंने उसको कहा कि आप चिंता मत करिए। अब मुझे बताओ, हर 10 गाड़ी में 4 गाड़ी इलेक्ट्रिक है, इलेक्ट्रिक स्कूटर, इलेक्ट्रिक कार। अब एग्रीकल्चर इक्विपमेंट, कंस्ट्रक्शन इक्विपमेंट, ये भी इलेक्ट्रिक पर है, हाइड्रोजन पर आ रहे हैं, फ्लेक्स इंजन पे आ रहे हैं। मैं खुद हाइड्रोजन की गाड़ी में घूमता हूं। मैं ये प्रचार करता हूं कि अल्टरनेटिव फ्यूल और बायोफ्यूल इज वेरी इंपॉर्टेंट फॉर द कंट्री। 22 लाख करोड़ का हमारा इंपोर्ट है फॉसिल फ्यूल का। इंपोर्ट सब्स्टिट्यूट, कॉस्ट इफेक्टिव, पोल्यूशन फ्री एंड इंडिजिनस। तो हमारी पॉलिसी और लोग खुद ही अब खरीद रहे हैं। अब उसको जबरदस्ती करने की जरूरत नहीं, और इस प्रकार का कोई कानून करने में व्यक्तिगत मुझे लगता है बहुत अड़चने आएगी, पर उनकी कमेटी का रिपोर्ट है। आखिर ये आए तो मेरे डिपार्टमेंट के पास।
चलिए, आपने एक बहुत अच्छा आश्वासन दिया। प्रश्न बहुत हैं गडकरी जी, बट मैं एक आखिरी सवाल आपसे जरूर पूछना चाहूंगा। कारण इसके पीछे ये है कि आज इलेक्ट्रिक व्हीकल को लेके कई लोग खरीदते टाइम आपस में भी हम सब बात करते हैं कि थोड़ी महंगी है, और इससे जुड़ी हुई बात, आपको क्या लगता है कि कोई एक ऐसा दिन आएगा जिसमें भारत में अगर 100 गाड़ी बिकती है तो 100 में से अधिकांश मेजॉरिटी इलेक्ट्रिक व्हीकल्स होंगी? ऐसा समय आने वाला है क्या?
देखो, आप ये कंज्यूमर को छोड़ दो, मुझे किसी को कहना नहीं पड़ा तुम इलेक्ट्रिक की खरीदो, ये सब खरीदने वाले हैं। क्योंकि जो गाड़ी 30,000 रुपए अगर पेट्रोल पे खर्चा करे, जिनका खर्चा 4,000 रुपए होगा और पोल्यूशन 0 होगा, तो खुद लेने वाले, और लग्जरी कार आ रही है।
आपकी अनुमति से एक बार ये हाथ खड़े करवा दे कि यहाँ पे इलेक्ट्रिक कार कितने लोगों के पास है, कृपया प्लीज अपने।
अगले साल के कार्यक्रम में आप करना, 60% से ज्यादा होगा।
चलिए, ये आपने एक बड़ी अच्छी बात की और अगले साल के कार्यक्रम की बात की।
दूसरी एक बात जो रहेगी कि जब इलेक्ट्रिक कार बस शुरू हुई तब लिथियम आयन बैटरी की कीमत $150 पर किलोवाट पर आवर थी। अब वो $55 पर किलोवाट पर आवर आई। और हमारे आईआईटी के इंजीनियर इतने होशियार हैं कि अभी हमारे एक इंजीनियर को फोर्ड कंपनी ने अवार्ड दिया, दिल्ली आईआईटी के। और उन्होंने एल्यूमिनियम एयर टेक्नोलॉजी भी ढूंढी है। जो बैटरी केमिस्ट्री है उसमें एल्यूमिनियम एयर टेक्नोलॉजी, एल्यूमिनियम, जिंक, ये सब के ऊपर बैटरी डेवलप हो रही है। और लिथियम आयन की कीमत जो है वो $55 पर किलोवाट पर आवर आई। मेरे हिसाब से आने वाले 6 महीने के अंदर पेट्रोल, डीजल, कार, स्कूटर, इसकी कीमत और इलेक्ट्रिक कार की कीमत सेम होंगी और खर्चा जो होगा पेट्रोल, डीजल, कार का, उससे ये कम से कम 1/5 खर्चा इलेक्ट्रिक का होगा और पोल्यूशन 0 होगा। तो नेचुरली अब वो जो लिथियम आयन बैटरी है उसका भी लोग बोले वेस्ट होगा, क्या होगा। तो ये जो पावर स्टोरेज के लिए वो बैटरियों का उपयोग हो रहा है। तो सोलर पावर अगर एक्सेस बनती है तो लिथियम आयन बैटरी की जो 5-6 साल के बाद जो वेस्ट बैटरी है उसका उपयोग स्टोरेज के लिए होगा। तो मुझे लगता है कि आने वाले दिनों में सेम हो जाएगी कीमत।
आपने ये बात कही माननीय नितिन गडकरी जी, प्रश्न मेरे मन में बहुत है और मैं जानता हूं यहाँ सभागार में भी कई लोगों के मन में कई प्रश्न होंगे, पर समय का अभाव है। मैं आपका पुनः धन्यवाद करता हूं, हृदय से धन्यवाद करता हूं कि आपने समय दिया आज, और अब बाकी कार्यक्रम शुरू करेंगे। आपका पुनः एक बार धन्यवाद।
बहुत बहुत धन्यवाद। थैंक यू।
Warm round of applause, ladies and gentlemen. May I request you, sir, to please stay back on the stage. I'll also request Shri Arun Puri to please walk up to the stage, the founder chairperson of India Today and the editor-in-chief, to present a token of appreciation to our guest of honor, Shri Nitin Gadkari. Warm round of applause, ladies and gentlemen. Stay back. I'll also invite on stage Shri Ashishkumar Chauhan, MD and CEO, NSE, to please present a bull with a family to Shri Nitin Gadkari ji, as well as the NSE bell icon. Request you to stay with us, sir, as it is now the time to unveil the special milestone, the 30th edition of the Business Today Best Banks edition. May I request the easel stand to come in, please? And for the magazines as well after. Ladies and gentlemen, time to unveil the 30th edition of the BT Best Banks edition. Let's have the magazines, please. For 3 decades, this edition has stood as the benchmark of credibility, recognizing banks that have demonstrated excellence, resilience, and leadership as well. May I also request on stage Mr. Siddharth Zarabi and Mr. Alok Nair to join in. May I please request on the stage Shri Shaktikanta Das to join us on the stage, please. This is where, ladies and gentlemen, you do see former Governor RBI on the cover, along with many other bankers there. We have Shri Ramesh Babu, MD and CEO Karur Vysya Bank. We have Nidhu Saxena, MD and CEO Bank of Maharashtra, Sudipta Roy, MD and CEO L&T Finance, Rajat Verma, MD and CEO DBS Bank, and also Shri Shaktikanta Das ji. Thank you, sir. Sir, actually we wanted all the cover, everybody who has participated on the cover this time around, to please come up on stage for a nice group photo op, sir, with you. I will be requesting on stage Shri Ramesh Babu, MD and CEO Karur Vysya Bank, Nidhu Saxena, MD and CEO Bank of Maharashtra, Sudipta Roy, MD and CEO L&T Finance, Rajat Verma, MD and CEO DBS Bank, and Shri Shaktikanta Das ji to be with us on the stage so that we can enjoy with everybody this very inspiring moment. All these bankers who have had a remarkable journey and have led India's financial story from the front. Warm round of applause, ladies and gentlemen. Thank you so much, sir. Thank you, everybody. Thank you. Thank you, Sri. Thank you, AP sir. We are going to be now starting with the prize distribution ceremony. And for that, I'd like to invite on stage Yesdi Dagor Purwala, who is the CEO of KPMG India, to be with us, to be announcing the first set of the awards. But we'll also invite on stage Manoj Kumar Vijay, the Office Managing Partner KPMG, to run us through the methodology of selecting these banks. We've had 18 winners tonight. And what has been the methodology is what he's going to be explaining in a short presentation.
Good evening, everybody. Distinguished guests, Honorable Minister, and other ladies and gentlemen. Gives me immense pleasure that we have spent half a day now getting some insights, but now is the time for celebrations. And I think one thing that I must start with, this is a very special BT KPMG event today because we are finishing 3 decades of a partnership with BT. And this is one of the longest partnership, I think, which as a knowledge partner we would have had with the media house. So thank you for the support over the years. We have evolved this award methodology over the last 30 years as the banking systems have evolved. Basically, there will be 2 types of awards: the quantitative awards and the qualitative awards. We have seen it grow from the first we started with the bank awards. Now we added NBFCs. Then we added some Fintech awards. This year we are adding 2 special awards as well, the CO award and also the HFCs category. So we have enhanced the number of awards in the categories this year. What we have also seen in the quantity is we go through 36 parameters. We've evolved those parameters as the times come in. And we genuinely, try and see what are the parameters like growth, scale, size, profitability. We cover everything. And in the qualitative awards section as well, we have more than 16 awards today. Because of the shortage of time, I'm not going through in detail, but basically what I'm saying is it is a very comprehensive study we did for last 4 months, and along with BT, we are trying to put together the winners today. So congratulations to the winner, and look forward to celebrating with all of you. Thank you so much.
Thank you so much. And now, ladies and gentlemen, we are going to be starting off with the award ceremony. For the first set of award, I'd like to invite on stage Shri Ashishkumar Chauhan ji also to join in. The first category is Best Bank in Innovation. And the winner in this category is HSBC India. Huge round of applause. Let's call on stage N. Suresh, COO HSBC India, and Amitabh Nevatia, CFO HSBC India, to receive the award for the focus on digital adoption across its banking products and ensuring innovation is around AI-driven for consumer insights. The next award category is Best Bank in Human Capital Excellence, and the award goes to HDFC Bank. Let's invite on stage Vibharsh Naik, CHRO HDFC Bank, to please come up on stage to receive your award for getting it on the key areas of tech to drive employee experience. Many congratulations. for the next category, this is Best Bank in Emerging Technology and AI, and the award goes to DBS Bank India. Let's invite on stage Rajat Verma ji, MD and CEO DBS Bank India, for putting in place AI and ML models, striking strategic partnerships with the right amount of trust on governance and scale. Many congratulations. Let me also invite Ashima Goelji, Professor Emeritus, IGIDR, to present the next set of awards, please. The next category is Best NBFC in Innovation. And the award goes to L&T Finance. Let's invite on stage Sudipta Roy, MD and CEO, L&T Finance, for developing Cyclops, an in-house AI-driven next-gen digital credit engine to determine credit quality of potential customers. Many congratulations. Warm round of applause, ladies and gentlemen. The next category is Best Bank in Social Impact, and the award goes to Indian Bank. Brajesh Kumar Singh, ED Indian Bank, to please come up on stage to receive your award, sir, for making social impact integral to core banking operations and restructuring both lending and delivery to reach vulnerable communities. Many congratulations to you, sir. So much. And the next category is Best NBFC in Human Capital Excellence, and the award goes to L&T Finance. Let's invite on stage Sudipta Roy, MD and CEO L&T Finance, to come up and to receive your award for that relentless focus, overall talent, and getting it right on tech to drive employee experience. Yes, DG and Ashima ji, we will thank you on that note. We'll move on to the next category. This is in the Fintech category award. And for this, I'd also like to invite back on stage, Ashima ji will thank you here. Ashima ji, we'll thank you here. Thank you so much, ma'am, for joining in. We'll call on stage Ms. Zareen Daruwala, the Group CEO of PL Capital, to award the next category, please. Next category is Best Fintech in Value-Added Services. The award goes to Perfios, Sabyasachi Goswami, CEO Perfios, for garnering a large share of India's digital loans serving financial institutions across. Thank you, Zareen ma'am, for being with us. Let me now invite the next category. This is Most Prestigious Jury Awards. Now we're going to be giving away. And this one is for the Bank of the Year. And this one goes to ICICI Bank, Sandeep Batra, ED, ICICI Bank. Across businesses and segments through a well-defined strategy, getting it right on the business mix. Many congratulations to you, sir. Ladies and gentlemen, Bank of the Year, ICICI Bank. And we are going to be now announcing the Lifetime Achievement Award. For this, may I please invite on stage Shri Shaktikanta Das, former Governor RBI, to receive your Lifetime Achievement Award. from Shri Nitin Gadkari ji and Shri Arun Puri. For a distinguished career as a bureaucrat and weathering many storms, most notably the NBFC crisis as RBI governor, to creating a resilient institution that can withstand multiple shocks in challenging environment. Many congratulations to you, Shri Shaktikanta Das ji. Thank you so much, Shri Shaktikanta Das ji, and thank you so much, Nitin Gadkari ji. You have a flight to catch and therefore you have to immediately leave. We will thank you for being with us here and for presenting all the awards tonight. We still have some awards awaiting viewers, so please sit down and we are going to be continuing with the award ceremony right after. I'll also request Shri Shaktikanta Das ji to please join us for the next set of awards on the stage, please. And let's also request Shri Dinesh Khara also to join in, the chairman of the jury also to be with us on the stage to present the next set of the awards with Shri Arun Puri. The next category is Individual Excellence Awards, and we are going to be presenting 2 awards in this category. The next category is Business Transformation Leader of the Year, Private and Small Finance Banks, and this award goes to Sanjay Agarwal, MD and CEO, AU Small Finance Bank. Many congratulations to you for starting out with commercial vehicle financing and making that significant merger to now wanting to make that transition to a universal bank. Many congratulations to you, sir. Warm round of applause, ladies and gentlemen. The next award category is Business Transformation Leader of the Year, Public Sector Banks. And this award goes to Rajneesh Karnatak, MD and CEO, Bank of India. Many congratulations to you, sir, for that focus on digital and HR that has resulted in improved financial performance to include a stronger balance sheet and successfully reposition itself. Many congratulations. For the next category of awards, let me also invite on stage Mr. Parag Bhise, the CEO and Executive Director, Nuclear Software, to please join in on the stage to present the next set of awards. The next category is Best Small Finance Bank. And this one goes to Jana Small Finance Bank. Gopal Tripathi, Head of Treasury, also to join in on the stage to please collect your award. This is a quiet growth story in small finance banking, backed by steady growth in balance sheet that has led to higher profitability. Many congratulations, Sri Gopal Tripathi for Jana Small Finance Bank. And next, let's invite on stage Best Small Indian Bank. And this one goes to Karur Vaisya Bank. May I please invite on stage B. Ramesh Babu, MD and CEO, Karur Vaisya Bank, to please come up on stage for taking a series of successful measures like automation and AI. Many congratulations. The next award goes for the best mid-sized bank, and this award goes to Bank of Maharashtra. Nidhu Saxena ji, MD and CEO of Bank of Maharashtra, should please come on stage to receive your award for gross NPAs at a decadal low. Many congratulations. Many congratulations. The next category, ladies and gentlemen, is Best Housing Finance Company. And this one goes to Bajaj Housing Finance. Gaurav Kalani, CFO, and Neeraj Adani, Chief Risk Officer, Bajaj Housing Finance, to come in on the stage to receive your award for becoming a dominant player in India's mortgage story. Many congratulations. The next category is Best Foreign Bank. And this award goes to HSBC India. Let's invite on stage N. Suresh, COO HSBC India, and Amitav Nevatia, CFO HSBC India, to receive the next award for getting the Indian recipe right. Many congratulations. Huge round of applause, ladies and gentlemen. And the next award category is Best Large NBFC, and this one goes to Bajaj Finance. Anand Bagri, Treasurer Bajaj Finance, to please come in on stage to receive your award. Many congratulations. And the next category is Best Large Indian Bank, and this one goes to ICICI Bank. Many congratulations to the team. This is the 5th year running when ICICI Bank has won this award. Now please call on stage Sri Sandeep Batra, ED of ICICI Bank. Everybody, thank you so much for the awards presentation, and thank you everybody. Congratulations to all the winners tonight. This is the 30th edition of Best Banks. Thank you. You've been a wonderful audience, viewers. Thank you so much for being with us. Dinner, join us for dinner tonight, but thank you so much for being with us to celebrate 30th edition of BT Best Banks, and for being with us at the Banking and Economy Summit as well. Many thanks. You've been a wonderful audience. With that, Sakshi Batra signing off right here at the event. Many thanks for joining us.
global cues to live Dalal Street moves. We decode what matters for your money today. From